bad but minor,
Adam,
versus across the board, huge tariffs.
There's a bigger question here, Adam, and this is the reason why the whole concept of tariffs has been resonating with a lot of people, which is there are whole swaths of the U.S. economy that feel left behind by globalization, by moving manufacturing overseas, and would welcome the manufacturing and some of the industrial prowess to come back to the United States. Is there a proposal to increase production in the United States in a sustainable way with the staff that we currently have?
I think the answer, Lisa, is no. I mean, I might push back at you at that political perception because it's not really grounded in reality, but certainly there are people who are obsessed with having domestic manufacturing. And we have manufacturing. You know, you talk about Apple, you talk about NVIDIA, you talk about all these companies that are worth much, much more, as somebody tweeted this morning, than the companies that make stuff. You know, these are the companies that design stuff, that do R&D. And so then you can say, well, what about the terrible things that are happening? There aren't that many terrible things that are happening. We have the highest labor force participation rate in forever. We have one of the lowest unemployment rates in forever. We have income growth much higher than it's been. We have fewer people in poverty than it's ever been. So this constant refrain that we're losing because our manufacturing has moved up and up and up in value and become more productive and therefore needs less workers on the floor is falsehood. So then you say, okay, but how do we buy off the angry people? Well, that's how you get Trump. And that's not good. And so at some point you have to appeal to people that they maybe shouldn't be so angry, or that they maybe should adjust. And the reality is we can't drive the entire country about what's happened in a few counties and a few states. I mean, that's part of our politics, that year after year, a majority of the country clearly has views on whether it's gun control or globalization or the economy or healthcare, and it gets stymied by very small groups.
Adam, where does national security fall into this at a time where an increasing number of the goods that we're talking about could potentially have some national security components?
That's a much more serious issue, Lisa, and that's the one which is genuinely difficult and people are wrestling with. I mean, you can imagine, it seems a bit of a stretch, but you can imagine, for example, if we do buy Chinese EVs, that there would be planted bugs and controls and things in there that could be dangerous. Not clear what the economic response, however, is the way to get around it. That doesn't mean you should let everything in. But we see right now, there's news reports now about all these weapons that the Russians are using, all these things that the Chinese are using, where you can see that ASML, TSMC, all these companies that we're protecting are still selling and producing in China. So, and that's in the very narrow spectrum of focusing on just the chips and just these critical industries with the full weight of the US government and allies, and you still can't maintain the sanctions and the controls. So again, it's like the tariffs. You just keep upping and upping and upping it, saying, well, we didn't try hard enough.
Yep.
Or do you rethink?
Adam, it's a tough spot. A conversation you and I will continue. We'll all continue with you through to Election Day and beyond. Adam Posen there at the Peterson Institute. I want to mention a data point that I think is at the heart of all of this. If you go back to 1995, China's share of global manufacturing exports, 3%. 25 years later, north of 20%. And a lot of towns, a lot of communities in the Western world left behind as that manufacturing shifted abroad. And where we're at right now is what Donald Trump ultimately displayed back in 2016, that this is how you win elections. This is how it's done. And what we've seen develop since thereafter is the spread between sound economic policy and the kind of policies that win you elections getting ever wider. So you can have conversations like this with economists. Adam can make really fantastic points on the matter. But as far as politicians are concerned, these are the policies they believe they need to convey to the electorate to win elections. And until we do something about that, then ultimately this is the path forward.
And it is the swing states that have seen a lot of these areas hollowed out and really become the main areas that determine elections for the entire country.
Up next on the programme, we'll catch up with Bloomberg's Javier Blas as oil rebounds with traders tracking supply risk in the Middle East. Brent 74, WTI back in the 70s.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Coming into Monday on the longest weekly winning streak of the year so far on the S&P 500. We just had week 6. As we open up week 7, we're negative by about 1/3% on the S&P, just a little bit softer on the Nasdaq 100, down by 0.6%. Earnings season ramping up through the week. GM and Tesla, 2 to watch.
To me, that's actually possibly the highlight of the week in an otherwise data light week, unless you consider the Beige Book a highlight, which I think it should be. But really, to me, a key question here about competition from China and the delta, the difference between U.S. car manufacturers and what we've seen out of Europe that have really been hammered in both expectations and sales forecasts going forward.
We've had a few analysts come on this program and point out the same thing, that we had downgrades to the outlook. South Stellantis, we heard from VW, we heard, I think, from BMW, the same story.
Same story.
Hasn't been great for others either. Are GM and Ford going to follow suit with the same story?
There is an understanding, and frankly, we've seen this in recent earnings, that they have actually diverged meaningfully because they have a solid buyer base in the United States. You don't have Chinese cars coming into the United States. And frankly, their sales in China are not as big of a component as they are among European auto manufacturers. Not to mention the fact that the likes of GM have done very well with both hybrids as well as combustible engine cars and trucks, which seem to be a mainstay for Americans.
I'm thinking of Jay Pulaski and Pulaski's Tripolar World. 3 very different auto markets. And we've talked about this a few times on Bloomberg Surveillance, that this is the direction of travel. We're going to have 3 separate islands that don't really interact with one another, and auto plants in one place to produce for one, auto plants in another one to produce in another.
It seems as though in this tripolar setup, the United States is further along in terms of the isolation. Maybe it's geographic, but in terms of the supply chain as well, than, say, Europe, which hasn't come up with that framework perfectly yet for exactly how that will look.
I have a long-term question for the auto industry, which is, if the world really does move to EVs tangibly in the future, what does China do next? They have the raw materials and they have the processing, about 80 to 90% of the entire production. At what point does China say, you want an electric vehicle or you want the battery for the electric vehicle? You cannot just buy the battery. You have to buy the car.
This is what the tension could look like in the coming years. That's the equity market. Here's the bond market. 2-year yields look like this. They're up and away by 3 basis points, 3.98, just short of 4%. We're up 4 basis points on a 10-year, 4.1282. Yields the highest since July 30th of this year. So you've got to go deep into the summer to see yields this high earlier this year. A question about what's driving this. Is it the economic data or is it the politics? Is it the politics? And I think Stuart Kaiser did a decent job of this a little bit earlier from Citi. Stu said it's not so much about a red wave. It's about taking away another scenario. It's taking the scenario away that is a blue wave. People really reducing the probability that could take place, evolve, materialize in the next few weeks.
And that's the reason why he said volatility had come down and marginally, but you haven't necessarily seen the volatility go down dramatically when it comes to the bond markets, because there is this possibility, if you get a red sweep, that could potentially, under certain economic scenarios, cause the deficit to increase more, as any sweep would, and thus cause some sort of extra premium to be baked into the Treasury market.
This story of high yields in America fueling some dollar strength for a third consecutive week. That is the longest weekly winning streak for the US dollar against the euro going back to June of this year. If you look at the euro right now at 108.51, it's negative once more by 0.1%. I think this sets the stage for the IMF World Bank fall meetings this week, just how different the outlook is for America versus the rest of the world.
And exactly what is the approach that lawmakers take and policymakers take, especially as the heads of finance ministries come together? Do they talk about borrowing more money to support industries, or do they talk about the idea of fiscal restraint and the woes of the deficit of the United States and how that could cause a problem and how it's important to bring your deficit down? If they talk like that, a lot of people will be nodding their heads, but it is not necessarily a good sign for the European region, which might need more of a cash infusion than, say, fiscal restraint.
The euro at 108.51. Under surveillance this morning, Southwest Airlines and activist investor Elliott Management may finally be heading towards a truce. Sources telling us here at Bloomberg that both sides have been discussing a potential settlement that would avoid a proxy fight for control of the airline's board. Lisa, that stock is down 1.3%.
So basically, it looks like they have a stock buyback plan. They're going to keep the CEO. They kicked out the chairman. Either way, Southwest shares are up 7% so far this year, which would be the first annual gain going back to 2019. There is a feeling that this company has underperformed, even at a time when people have been talking about how low-cost airlines in general have been seriously challenged.
On top of this, we've seen Southwest come out and make these policy changes and these tweaks to not just revitalize the company, but also try to fend off Elliott. I have to say, at the end of the day, I think the consumer might win from this. Southwest will begin selling assigned seats late next year, introduce a premium fare option offering extra legroom. So if you want to get maybe a little bit of a cheaper airline price ticket, but not terrible service or terrible legroom, they're doing some due diligence.
Who paid for this spot?
There's a big reason that there's an activist investor on board, because everything you just said could have been said 5 years ago. They're so late to this story.
Honestly, you need to get fees. Otherwise, you're going to have a hard time. You need to become a credit card company and just sell all the extras, sell the oxygen that you have to breathe. I'm waiting for that to happen because I remember flying Frontier. They said, do you want a drink? OK, that's going to be $3. And that was a bribe for my kids.
About to say they were about to start selling oxygen over at Frontier.
Well, you never know.
Pretty close to it. Let's get you an update on politics. Kamala Harris saying Donald Trump's lack of decorum will disqualify him from some voters. Harris telling Reverend Al Sharpton of MSNBC, the US president's, quote, walk into rooms around the world with the earned and self-appointed authority to talk about democracy and the rule of law. He's not earned that right, and that's why he's going to lose.
She's going after some of the things he said on the campaign trail this weekend. Some of them were inappropriate. I'm not even going to repeat them. Not just about calling her out, but also former pro golfers, etc. This might not land for some people, but it could land for others. The issue is, obviously, 2 weeks to the election, they're all going to be giving it everything they have. Where are they today? Trump is going to be in North Carolina, wanting to make sure that state that notoriously goes red stays with him. And where is she? She's going to every single blue wall today. Pennsylvania, Michigan, and Wisconsin.
So we leave the golfer comments to one side. Pretty strange over the weekend. Let's get you an update. I'm not going there. An update on the Middle East.
Want to.
Hezbollah attempting to attack Prime Minister Benjamin Netanyahu's home north of Tel Aviv. No one was injured, but Netanyahu's saying it's another reason retaliation against Iran is warranted. Israel still drilling down on plans for an assault against Iran 3 weeks after a ballistic missile attack.
So what I find interesting is that today we are going to see Secretary of State Antony Blinken going to the region. His 11th trip since the October 7th terrorist attack. Why is he going now? I really do think this is the United States making sure they get him in the region. You have Lebanese reporters talking about the fact that Amos Hochstein is also in the region in Lebanon. They want to get these U.S. officials in the region. Why? It buys them time. If you have the Secretary of State in the region, you cannot be Israel and then have a massive retaliation against Iran at the same exact time.
Part of the reason crude is up this morning by 2%. WTI $70.80. Crude rebounding after falling close to 8% last week, with traders keeping an eye on supply risk as Israel continues to weigh retaliation against Iran. Other headwinds including signs of soft landing in China as banks there cut lending rates. Bloomberg's Javier Blas joins us now for more. Javier, welcome to the programme, sir. We're going to be talking about coal. We'll talk about gold as well. I want to start with oil. You wrote a number of weeks ago that the risk of falling to 50 might be greater than the risk of rallying to 100. Has your view changed, Javier?
No, it has not changed. And mathematically, and I know this is a bit of a red herring, but mathematically, with Brent and WTI trading between $70 and $75 a barrel, we are closer to 50 than we are closer to $100. I believe that Israel has put aside his initial intention to retaliate against Iranian oil installations, and therefore we have removed a chunk of the geopolitical risk. The focus is still on 2025, more OPEC crude coming into the market, soft demand growth next year, and an oversupply market that doesn't require prices close to $100 oil.
Javier, when you look at the fundamentals of this story, we have Amin Nasser basically today talking about the fact that he's bullish on China. Do you see that demand pick up in China?
Amin Nasser is a seller of oil and one of the world's largest sellers. So he also always bullish about China. I don't think that the global oil demand is as weak as some people say. We are growing still around 1 million barrels a day, and that is quite remarkable considering all the amount of electric vehicles and energy efficiency that we are introducing in the global economy. But at the end of the day, the big problem is that OPEC bringing extra barrels into the market, the non-OPEC supply led by the United States, but not alone. Brazil, Canada, Guyana, other places, more oil coming into the market. At the end of the day, this is not just a question about whether China is strong. It's also a question about supply. You could have very strong demand and very strong supply, and therefore an oversupply market. And I think that when you put all together for 2025, we are going to have more oil that we are going to consume. Therefore, prices will need to be a bit weaker.
Okay, but let's look at the short term again and just look at the geopolitics of what's playing out. Do you think the market right now is pricing in enough the potential for an extended or war we are seeing right now in the Gulf?
No, the market is not pricing a significant disruption in Middle East oil supply. If we were to have a significant disruption in Middle East supply, say that we were to lose all the Iranian oil supply and perhaps oil from other countries in the region, say Saudi Arabia, the United Arab Emirates, Kuwait, we will have much higher prices. The market is not there, and I don't think that the risk is as elevated as some of the bulls try to paint. But yes, I do agree that if we lose a significant chunk of oil, then prices need to go much higher. That is not price.
How much is gold a geopolitical play versus a completely separate story entirely?
To me, it's a complete separate story. The main drivers is too much public debt around the world, high fiscal deficits, with some countries running based on a GDP fiscal deficits that look more like we are fighting a war with countries that they are not fighting wars at the moment. So, yes, there is an element every time that there is tension in the Middle East, there is gold, that's the safety, but I do think it's mostly a financial play, a fiscal and public debt. And the meetings this week in Washington of the International Monetary Fund and the World Bank are going to be having a big focus on public debt, and I think that probably is positive for gold.
There's a sort of larger takeaway here where we talk about what's influencing, what's sort of the geopolitical hedge, what's sort of the idea of the supply-demand dynamic, given how much transition there has been to a number of electric vehicles in places like China. It raises the question of increased demand for what, right? How much oil are they actually going to use? What is the commodity that you look to really understand consumer appetite? You start to see it pick up, or sort of the most leverage to an increase of activity around the world? Is it still oil?
Oil still gives you a very good, clear indication of where the global economy is heading. And if you could drill down in subcomponents of oil, I would say diesel is really the key component of the global economy. That is today where the weakness is in China. There's a lot of talk about gasoline demand being weak because electric vehicles penetration in China and other places. But really, the refined petroleum product that has been weaker relative to what the expectation was has been diesel. And that's manufacturing, that's construction activity, generally transportation of goods.
Javier, when you're talking about AI demand, everyone's going in for electricity, this consumption. You have a great piece out this morning talking about the fact that coal is not going away and actually is the driver of this transition. Are we at peak coal, or potentially could this even go higher?
We have been talking about peak oil since, if I remember correctly, around 2013, and it was always said that peak oil was going to be reached in the next couple of years. So in 2013, we say it was in 2015. 2015, it was 2017, and so on and so forth. And we are not there yet. Global demand for coal in 2024 is going to be at an all-time high. I believe that next year will be very similar. So we don't have yet peak. And also, the word peak to me is the wrong one. You are a mountaineer, you like a bit of trekking. When you talk about peak, you reach the summit of a mountain, and what it comes after the climb is a very rapid descent. It's just the going up and the going down is very similar. Here, when we talk about peak, is we reach the summit and we stay there on a very high altitude plateau, and that's not what a lot of the net zero by 2050 scenarios say. We need a peak followed by a rapid decline, almost a cliff. That's not happening.
How much are people looking at the AI adoption and how much that's going to really increase demand when they start looking at things like coal usage, when they start looking at what gasoline demand could look like going forward?
If you look at what the electricity consumption in the next, say, 7 years, 6 years from now until 2030 is coming from, AI is going to be playing a role alongside data centers, but it's very similar in terms of size for what we know today to the incremental need for desalination of water. The biggest drivers of electricity demand in the next, to the end of this decade, to 2030, are going to be coming from the industry, where the industry continues to electrify, moving away from natural gas and petroleum into electricity. It's going to be coming onto electric vehicles, and the other big chunk is going to be on air conditioning. The needs for cooling, the needs for air conditioning in the world are absolutely skyrocketing. And that's a combination of climate change, hotter weather, but it's also a combination that a lot of the population in countries where the summers are really hot are getting wealthier, and they are reaching the GDP per capita that is traditionally associated with the first purchase of an air conditioning unit. And that is what is happening across large swatches of North Africa, Southwest Asia, places like Pakistan, India, etc., etc. And that's where the electricity is going to be coming in. Artificial intelligence, yes, I'm just trying to be nice to artificial intelligence. It's the kind of sexy new thing in the energy transition, but it is not the thing. Desalination is going to be as important. Very few people talking about that part of the electricity consumption.
Interesting. Javier, this was just a brilliant piece. Enjoyed reading it. Javier Blaster of Bloomberg Opinion. You can find that column on Bloomberg.com and on the Bloomberg terminal. Here's a few paragraphs that jumped out for me. The International Energy Agency published its annual World Energy Outlook. Buried in the 398-page report was a warning. And here's the quote. The outlook for coal has been revised upwards, particularly for the coming decade, principally as a result of updated electricity demand projections, notably from China and in India. And here's the number for you. It wasn't a small revision. Javier writes, coal consumption in 2030 is now estimated to be 6% higher than only a year ago.
So how is that transition to clean energy going? This is the quintessential dirty energy source, and yet this is sort of one of the necessary components to adapting to a very new world.
This is why there's tons of criticism on the clean energy transition, especially looking at these cheap EVs coming out of China. That actual EV may be better for the planet, but how it got to be made, these negative externalities on the transition. You know what else I thought of when Javier's talking about not this peak, but this plateau? Remember in the debate when Donald Trump went after Germany and how they had to revive, quote unquote, normal energy? Germany came back with a response, but their response in itself actually proved Trump's point. Germany said, I just pulled it up, coal will be off the grid by 2038 at the latest. 2038. That was their response.
It's the dirty secret in the energy transition. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. Goldman Sachs says the S&P 500's decade of big gains is about to come to an end. David Kostin and team said that the U.S. stocks are unlikely to sustain their above-average performance and that investors will turn to other assets like bonds for better returns. Kostin predicts the S&P 500 will post an annualized nominal total return of just 3% over the next 10 years. That compares with 13% in the last decade and a long-term average of 11%. Boeing shares higher in the pre-market trade, up 3%. It reached a tentative deal with its largest union to bump employee pay by 35% over 4 years. Workers vote on Wednesday to end the 5-week strike. That happens also to be the same day of Boeing's third quarter earnings, and it will be CEO Kelly Ortberg's first. However, hourly workers have yet to sign off on the agreement. Union negotiators are not endorsing the proposal. The Kansas City Chiefs are the NFL's last undefeated team after taking down the 49ers in overtime in a rematch of last year's Super Bowl. The game saw no touchdown passes and 5 combined interceptions between Pat Mahomes and Brock Purdy. Elsewhere, the woes are deepening for the Jets after falling to the Pittsburgh Steelers on Sunday night. Donald Trump was among those in attendance, making a campaign stop and leading some fans in a USA chant. And that's your brief. John.
Danny, thank you. More from Danny in about 30 minutes. Up next on the program, the U.S. in the driver's seat.
The world's savings have gone to the United States. What we are now is, I think, the market completely wrong-footed by the U.S. economy.
That conversation up next.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in. Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Stocks just a little bit softer. We're down 1/3% on the S&P 500. Under surveillance this morning, the U.S. in the driver's seat.
The capital inflows from everybody sucked in by U.S. yield, by U.S. tech stocks, by U.S. exceptionalism, U.S. outperformance overall over the last couple of years. So, the world's savings have gone to the United States. I think we have to clean out some of the positioning at some point and get a more meaningful dollar sell-off before the U.S. economic outperformance can drive us lower. What we are now is, I think the market completely wrong-footed by the U.S. economy.
The US dollar on the longest winning weekly run since June. Terry Wiseman of Macquarie suggesting recent strength has two pillars, American exceptionalism and the Trump trade. The first has been attested to in more hawkish US data, stronger activity, less disinflation versus the rest of the world. The second found its support in Donald Trump's rising probability of winning the US election. So long as they persist, the dollar can strengthen. Terry joins us now for more. Terry, good morning.
Good morning, John.
So that's the big if at the end there. Can they persist? Which one is more durable?
Well, we don't know who's going to win this election. And I think regardless of who wins this election, American exceptionalism will continue at least a little longer, in the data certainly. There is a catch, though, and the catch is what if we have an election? And forget about who wins for a moment, but that election is contested, and people start to question American institutions, specifically election and political institutions, and legal institutions as well, because we know there'll be a lot of lawfare involved in any contesting of the result of this election. That's where we might start to get fragility in the American exceptionalism story, and that's how the American exceptionalism story is linked to the election. But until then, they're really two separate issues, and they can run independently. Clearly, if Trump wins and we don't have a contested election, then we'll have a Trump trade and we'll have American exceptionalism running at the same time. That's the better scenario for the dollar, obviously.
Just how much upside could there be in that scenario?
Well, our own projections have the euro-dollar FX rate going down to 105 if Trump wins. We have dollar yuan in China going up to 740. It's clearly a strong dollar story that continues from these levels if Trump wins.
So you're talking about a contested election. At the same time, people are talking about election week, not necessarily election day, or perhaps election 2 weeks or 3. At what point does it become a problem for the dollar? At what point, as it grinds on, as ballots are counted and people kind of try to determine and recount again?
Yeah, so if you go back to the 2020 election, I believe that there were some states that had not resolved their final counts for 4 days or 5 days. Now, that didn't mean that we didn't know who was going to win, because maybe those states didn't matter in view of the counts that we got from other states that were deterministic in favor of President Joe Biden. But I think that's a good benchmark, right? If we have a situation where states that happen to be decisive for the election are going on beyond 3 or 4 days, then I think we start to see fragility in this market.
If there's a contested election, do people buy the dollar and U.S. Treasuries because they need a safe place to go, or they're viewing the United States as not on fair footing, as a scary place potentially to invest, and they buy other things? Like, is that reason why maybe gold is higher?
It certainly is one of the reasons why gold is higher. I think people are trying to hedge the political uncertainty out there to some extent. And it's not just the U.S., but it's international as well. But getting back to the U.S., yes, they would buy treasuries because that is the obvious safe haven. However, I don't think that would be good for the dollar, right? I think in this context, it would be lower yields, but a weaker dollar as well. And those are completely consistent with one another if you think about it.
Terry, the one I'd worry about, and Lisa, I'm sure you feel the same way, if we wake up that morning and Treasuries sell off and the dollar does too, then we've got a problem, a big problem.
That speaks to a question of really what the underpinnings of the country is, and really goes to Terry's point about American exceptionalism and how much that gets undermined in a serious way.
Terry, it was great to see you.
My pleasure,
as always,
John.
plenty to think about. Thank you, sir. Terry Wiseman there of Macquarie. In the third hour of Bloomberg Surveillance, we'll catch up with Jim Caron of Morgan Stanley, Jason Gursky of Citi, Aditya Bharve of Bank of America, and we'll speak to Bob Elliott of Unlimited Funds. 15 days to go until Election Day, or as Lisa suggested, Election Week. Kicking off just around the corner. Equity futures on the S&P 500 just a little bit softer from New York City. This is Bloomberg.
What prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number three, they make difficult decisions on incomplete information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. The top names in tech are on Bloomberg.
A large number of countries are subsidizing their regional data centers so that they could become able to build out their AI infrastructure. They recognize that their country's knowledge, their country's data, digital data, is also their natural resource. Not just the land they're sitting on, not just the air above them, but they realize now that their digital knowledge is part of their natural and national resource. And they ought to harvest that and process that and transform it into their national digital intelligence. And so this is what we call sovereign AI. You could imagine almost every single country in the world will eventually recognize this and build out their AI infrastructure.
Nobody covers technology like Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers. You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Financial conditions are incredibly loose.
The market in fixed income is definitely volatile.
Equity volatility, for the most part, has been low.
It can look a certain way at the index level, but there's opportunity under the surface.
I don't feel bearish by any stretch, but valuations feel full.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Election day 15 days away. Live from New York City this morning. Good morning, good morning. The third hour of Bloomberg Surveillance starts right now with equities pulling back from all-time highs on the S&P 500, the 47th record high of the year in Friday's session. We're down 1/3% on the S&P this Monday morning. We're down 0.6 on the Nasdaq 100. Looking forward to a week full of earnings. The focus of our attention on the automakers in America. Tesla and GM just around the corner.
How much visibility do they have into the future at a time where you do see this increasing fissure, particularly in the European auto manufacturers? I'm also wondering, and I know this sounds like it's really peripheral, but how much they see an increase in demand because benchmark rates are going down. This is the type of sector that could get a bit of a boost from some of the interest rate cuts we've seen so far.
I'm glad you started this hour with its 15 days to the U.S. presidential election. Citigroup comes out today waiting for two risks. No, honestly, we're going to get earnings and stuff, but really we're waiting for two risks. And they say limited data out this week will keep markets focused on the two risks, the U.S. election and the upcoming jobs report. In the meantime, jobless claims and PMI will be the focus this week. But really, we heard from Neela Richardson. She's talking about the fact that it's a boring economy and there is hesitancy on the side. Why? Because people want to know the outcome of the U.S. presidential election before they start maybe moving jobs, investing more, getting M&A deals done. The list goes on.
Get that week ahead up on the screen again, because I think it all speaks to each other. The auto earnings later on this week, potentially speaking to a divide of weakness over in Europe and strength in the United States of America, a divide that the IMF World Bank full meetings will have to address. The election 15 days away, the policies that we could see implemented in the next 6 months in this country could really shake up that industry and those economies in a much bigger way.
In a way, they are the epicenter of a whole host of different things that we've been talking about, whether it's the tripolar world, as you were talking about, in terms of isolated industries that are growing up in their own, national security and questions about where some of the chips that are an increasing component of cars are, and then to the prowess of manufacturing. And as Adam Posa was saying, that has become, in some ways, one of the biggest political deciding factors at a time where a lot of the swing states tend to really be manufacturing hubs, or at least used to be once upon a time.
Every time we've gone down to these meetings, we've had this conversation. Their ability to retain and in some places regain relevancy in this conversation. The IMF and World Bank, they've lost the fight. They've lost the conversation. They've lost the battle. It is just taken as done that these tariffs are going nowhere. They're going to stay on or increase. And there's not much they can say this week that's going to change that.
This used to be a celebration of globalization. We are seeing the deconstruction of at least the concept of globalization in its heyday. And you have to wonder where these meetings, where the IMF, where the World Bank will sit with this. Do they castigate the United States for a deficit? Do they say that that's going to lead to higher borrowing costs? Do they encourage some sort of spending in a place like Europe? How do they sort of uphold some sort of order that they once had at a time where ultimately a lot of the politics coming down the pike are really going to undermine some of what they ascribe to?
Lisa, heading down to the nation's capital a little bit later this week. Fantastic lineup of conversations coming up for you. We'll share them with you in the next few days. Equity futures on the S&P, a little bit softer here. We're down by 1/3%. The opening bell about 1 hour and 26 minutes away. In the bond market, yields grinding higher. We're up by 5 basis points now, 413.22. It's not just about the economic data. We've had a range of conversations already this morning suggesting that there is a Trump trade starting to emerge in this market over the last week. You see it in equities to some extent, though I would suggest it's difficult to disentangle that away from what we've seen from, say, bank earnings. You see it in the bond market to some extent, though I would also say it's difficult to disentangle that from the strong data we've had in the last week. But certainly the bond market is one way of capturing that story.
Especially because, Stuart Kaiser, I want to pick up on something that he said, that there is one scenario that is increasingly being priced out, looking more remote, which is the idea of a blue sweep. And as that becomes less realistic, you start to expect, well, on the margins, can't you imagine that yields would rise? And that's the reason why, on some level, people are saying maybe that's a component of what we're seeing in the bond market.
Mike, also this morning, Morgan Stanley, markets appear to be rotating towards the Trump win scenario. We're seeing that as well in the betting market, although there's lots of speculation. There's this whale like there was during when Romney was running, a huge whale in that betting market. One thing I will say to those that are discounting a blue sweep is what happened to the red wave that wasn't in 2022? Have people just forgotten?
In the midterms.
In the midterms.
Yields are up this morning, 5 basis points. The 10-year, 4.13. The 2-year, up 4 basis points, just short of 4% this morning. Coming up this hour, Jim Carron of Morgan Stanley with the S&P on the longest weekly winning streak of the year so far. Jason Gursky of Citi on why defence stocks are well positioned for growth. And Aditya Bave of Bank of America on the case for re-acceleration. We begin this hour with stocks trading near record highs and investors consider the prospect of a so-called no landing. Jim Carron of Morgan Stanley saying he's not bearish, but sceptical, writing this: inflation is creeping higher and puts further scrutiny on the Fed's ability to cut interest rates. Tensions in the Middle East also create a potential for a more systemic type of risk. We can't forget that a bull in a candy shop is still just a bull, and bulls can be unpredictable. Jim joins us now for more. Jim, welcome to the programme. Let's run with that analogy. A bull run, if you will. A bull in a candy shop. Do you think we're a little too high on sugar right now?
I think that's a good way to put it. I do think of it as a little bit of a sugar high. My concern is that we're pulling forward 2025 earnings right now, and we're painting an almost near perfect picture going into the future. It's not that I'm bearish. It's not that I'm negative on the markets broadly. I just think that we're getting a lot happening really, really quickly. In other words, we're getting this soft landing that everybody's been projecting, but we're getting it very, very fast. Valuations reflect that, right? So if you look at $280 earnings, let's say for 2025, which is roughly consensus, you assign a 21 or a 22 multiple to that, you're going to get an S&P somewhere close to around 6,000, and that's about where we are today. But if you take that valuation down a little bit and you get it a little bit more normalized to say maybe a 20 PE on those $280 earnings, then the S&P is 5,600, right? So it's lower than where it is today. It's not a disaster, but net, we're talking about a few percentage points in either direction. I don't necessarily think that we're going to be in a very strong bull run from these levels or from these valuations. So that's where my skepticism is. I'm not saying that things aren't okay, consumers strong, retail sales was good, inflation, earnings, GDI numbers are all good. So incomes are good so people can keep spending. What I'm saying is, how much can it continue at this rate of change?
Well, let's take the valuation piece of it, Jim. This is what Cameron Dawson of New Edge said over the weekend. You could have argued at any point over the last year that stocks were expensive. I'm sure you'd agree with that. But there needs to be a catalyst to change this march to ever higher multiples. It feels like, Jim, we're in this virtuous cycle right now, looking for a disruptor to it. And Torsten Slok of Apollo spoke to the same thing. The Fed's cutting rates. They've got a bias to cut even more. So we've got a dovish Fed. We've got high stocks and high home prices. Public and private financing is wide open, as you can see. Continued support from fiscal plans. Low debt servicing costs that are locked in for both corporates and households as well, Jim. That's just feeding on itself. So the outlook just keeps on improving. Now, Jim, from your perspective, do you have anything in mind that could disrupt that process at the moment? Because that's the reasons people are so bullish right now.
Yeah, and I agree with those reasons, and it's why we maintain a bullish tilt in our portfolios as well. Moving more towards neutrals, not moving towards negative, because we do think that there are some potential factors. Clearly tensions in the Middle East, a flare up there. We could get some election uncertainty or some election volatility around this. But ultimately, what we would need to see is damage done to the consumer and a rise in the unemployment rate. So I think some of the damage that could come is that if we start to see some weakening of the labor market. Now, we're not seeing signs of that yet, but we all know that the non-farm payroll data has been heavily revised over time. And if we do start to see that in a period where we start to see some margins starting to shrink across corporate America, that could create a significant or a faster move higher in the unemployment rate. And that would completely change the narrative. We're not there yet, Jonathan, and I think that's the most important thing to highlight. We're not there yet, but we do have to recognize that at these valuations and at these levels, that it makes it hard to have a positive surprise and it makes it easier to have a negative surprise.
One aspect of your argument is essentially kind of abnegating this idea of a cyclical tilt, that you can get that rotation away from big tech and some of the arch behemoth, other large stocks, and really fuel this next leg of recovery. And I saw the same kind of sentiment from Mislav Matejka over at JP Morgan. How much are you leaning against the cyclical move, the idea that the equal weight and the Russell 2000 have been outperforming?
No, actually, Lisa, I think it's a great question. And actually, we're embracing the broadening of the markets and the cyclicals and even the defensives. So what the markets are kind of realizing right now is that this Mag 7, the tech and the larger cap and the growth names that are out there have done a very, very good job this year, but there may be more to the story, and this is going to be across the Russell, this is going to be across the broader base sectors of the markets, this is going to be across the equal weight. One of the themes that we're putting forward as we move into 2025 is, how do you invest in what seems to be a fully valued market? You can't really play the beta. You can't just say, oh, well, the index is going to go up another X percent. More or less what you have to do is you have to start thinking about the different components of the markets. You have to find sectors in the markets that are well valued, that have lower PE multiples, good balance sheets, good factors, good interest coverage ratios, and have some pricing power and some controls. And you can find them in the other 493 stocks. And I think that's the stuff that we should be looking at. Those are the sectors, that's the management style that we need to start to move into, because I think it's going to be more about asset selection and investment selection as we move into 2025. as opposed to just a target weight asset allocation into X% equities or X% bonds. It's really going to matter how the constituency of your portfolio is made up, what sectors where and what valuations.
Is this a sort of 1 year time frame of an adjustment in investment cycle, or do you see this as a 10-year kind of time frame, as maybe the overall index level returns don't look as great as they have traditionally?
Yeah, I think this is something that probably adjusts over the next year or so. So let me call that short term. I don't think that we're always going to have this bifurcated market like we do today. I think there needs to be some coalescing, and that's where you get the broadening of the markets, where you get other sectors that haven't participated in the rally start to participate late. That's usually a late cycle thing to start to see. And then the markets tend to move in a more uniform way, beta up, beta down. So I don't see this necessarily as a long-term view, but I do say that 2025 will be all about tacticals. Don't forget, we're going to be talking about taxes and policy no matter who the next president is. We're going to start talking about that on January of 2025, because that's when the decisions are going to start to get made that are going to have big influences on markets going into late 25 and into 26, when policies are likely to change.
Jim, do you believe right now that the market is rotating into the Trump trade?
Yeah, I think it is. And I think it was said, nicely by Lisa, earlier on the show, that it's in some degree, it's a movement away from the blue wave, right? So I know we've been talking about tariffs, and we call tariffs a tax, but taxes are also a tax too, right? So if one candidate is talking about tariffs and another candidate is talking about higher taxes, they're both a tax. What does that mean to me as an investor? Inflation. And ultimately, no matter who the next president is, I think it's going to be really hard to get inflation under control. And that's one of the reasons why I think you see yields starting to move higher. It's not so much just a Trump trade or not, but I think it's a realization that we're moving to an area where deficits are still going to be high. There's still a large degree of spending that's out there, and the U.S. deficit is too high, by the way. And all of this is putting upward pressure on rates. And I think this is something that we're going to have to deal with as we move into the next months ahead.
370, September 18th on a 10-year when the Fed cut 50 basis points. 370 this morning, 413. Jim, it's good to see you. As always, thank you, sir. Jim Kern there of Morgan Stanley, a 40 basis point plus move on a 10-year since the Fed started cutting.
This comes with people expecting fewer rate cuts, with better expected data, and we have seen that out of earnings, we've seen that out of headline data, but it's also coming with this realization that regardless of who wins, deficits are going to be a bigger question mark hanging over this bond market.
Bond yields up 5 basis points this morning on a US 10-year, 413.42. With an update on stories elsewhere this morning, with your Bloomberg brief, here's Danny Berger. Hey, Danny.
Hey, John. Israel launched a military operation targeting Hezbollah's economic strongholds in Lebanon. The Israeli military sought to hit targets associated with the Al-Qaeda Hassan Association, which serves as Hezbollah's alternative banking system. A senior Israeli intelligence official said that the aim is to target Hezbollah's ability to function during the current war and later as it seeks to rebuild and rearm. Elon Musk's super PAC will give away $1 million a day until the election to someone who signs a petition calling for free speech and the right to bear arms. Musk said in a post on X, his pro-Trump group called America PAC will randomly pick a registered voter in swing states to win the prize through November 5th. Pennsylvania Governor Josh Shapiro questioned the legality of the cash payments on NBC's Meet the Press, calling it deeply concerning. The U.S. Grand Prix belongs to Charles Leclerc after the Ferrari driver clinched his third F1 race of the season. The Monaco native finished the race 1-2 ahead of his teammate Carlos Sainz, but attention quickly turned to rivals Lando Norris and Max Verstappen, who were locked in a controversial finish. Norris was penalized 5 seconds for leaving the track to pass Verstappen. Verstappen ended up taking third place. And that's your brief, John.
Danny, thanks for that. Ferrari 1-2. For anyone who missed that, we'll give you a recap again in about 30 minutes' time. We won't. I might.
Okay. Is this the new thing?
What's that?
More than even football?
I squeezed that in at the end of the programme.
I know, but I'm just asking.
We
is Formula One
front-loaded baseball.
Oh, we're doing baseball again.
Okay, I know, but I'm just wondering, is Formula One superseding football in Fairyland?
No, when Ferrari win, yes.
Okay, duly noted.
Up next on the programme, the Morning Calls Plus. Jason Gursky of Citi on why defence stocks are positioned for long-term success. That conversation up next.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
The Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
The open in about 1 hour and 12 minutes away. Stocks a little bit lower, down about 1/3 of 1%. The one to watch here, bond yields up 5 basis points. The 10-year 4.1361. Time now for some morning calls. First up, Citi downgrading Kering to neutral, noting lengthy and costly turnarounds for luxury brands. Their stock is down 1.5%. Your second call from Barclays downgrading UPS to underweight, flagging long-term pressures from the possible loss of Amazon volumes and competition from FedEx. We're down almost 2% in early trading. And finally, JP Morgan downgrading Hertz to underweight, citing a long path towards normalized earnings. That name is down 4% in the pre-market. Turning to defence, the Citi Equity Research Team saying rising government spending is positioning the sector for success, writing this: we expect spending growth to favour investments in the tools of deterrence and in the restocking of the munitions used in Ukraine and the Middle East, both of which suggest the growth of weapons spending is likely to be faster than overall military expenditures across the Western world in the near to medium term. I'm pleased to say that joining us now is Jason Gursky of Citi. Jason, welcome to the programme, sir. I know you've got 3 different scenarios for spending, and maybe we should start there. Could you go through each of them for us?
Yeah, sure. And the scenarios are all kind of related to defense spending as a percentage of GDP amongst Western allies in particular. Our base case is that the recent increase in spending as a percentage of GDP as a result of the conflicts in Ukraine and the Middle East, we consolidate those and we continue to spend out into the future at current levels of GDP, which sets up the industry or military budgets to rise, roughly in the low single digits with this shift to military spending that you mentioned in your shift to weapons spending that you mentioned in your setup there, allowing for mid-single digit growth. The upside scenario would be, an unforeseen conflict that pops up, or the sense that Western allies feel even further threatened than they do today, and we end up spending more. And then the downside scenario would be a compression of spending as a percentage of GDP, as again, kind of in your earlier setup here, that deficits get in the way, and we need to make some hard choices on what we end up spending scarce resources on. But at this point, our base case is GDP spending as a percentage of GDP remains relatively flat given the threat environment, and that we see mid-single-digit growth for the weapons buying accounts, which supports the defense contractors.
Jason, do you have a sense of who potentially would want to add when it comes to the defense budget, a Kamala Harris administration or a Donald Trump 2.0?
Yeah, look, at the end of the day, spending tends to be driven by the threat environment. Western allies spend when they feel threatened. I think what we might see is maybe a little bit of a shift in the mix of spending between the two administrations. Former President Trump has been pretty vocal about his desire to wind down the conflict in Ukraine in pretty short order. The last time he was in that seat at the White House, he shifted spending towards things that fly and float to support a perceived threat out of the Asia-Pacific region and China. So I think we could see maybe a little bit of downward pressure on things that crawl on the ground or support ground conflict in Ukraine, and more upward spending on things that would support conflict in the Asia-Pacific. Whereas Harris, I think, would be a little bit more even-handed and spread spending across both regions.
Jason, what strikes me about this conversation that's so interesting is modern warfare looks sort of similar to what I think of when I think of previous warfare, crawling on the ground, flying and floating. How different are some of the equipment demands that you see now for modern warfare versus, say, 10 years ago?
Yeah, they are different, for sure. I mean, they're supporting troops on the ground, but space-based assets have become incredibly important. Space is the ultimate high ground. We can garner lots of intelligence, surveillance, and reconnaissance kinds of data from space, and that's why we've seen companies like SpaceX be so successful in the launch environment, and the Space Development Agency spend a lot of money on developing new space-based assets. So space has certainly been a change here over the last 10 or 15 years. And then attritable aircraft and UAVs have certainly popped up as something that is pretty profound change in the way that war is conducted today. So we're likely to see a lot more investments in UAVs and attritable aircraft. And we've got DoD standing up an initiative called Replicator to do just that.
How much of an upper hand does the U.S. have versus, say, Europe when it comes to some of this military expenditure and creation in some of the companies that are coming out?
Yeah, it's a good question. Prior to the Ukrainian conflict breaking out, I think our report suggests that about 60% of the military kit that the Europeans purchased actually came from U.S. suppliers. Today, it's about 80%. So the industrial base here in the United States is much bigger, much more diverse in its capability sets, and much healthier than what we've got in Europe. Mario Draghi over in Europe recently penned a report suggesting, hey, we've got to fix this over in Europe. We've got to have a better industrial base, and we need to be better coordinated. So that's probably going to be one of the interesting lessons that comes out of this, and maybe the long-term implications is that maybe Europe becomes a little bit better coordinated and stops importing as much as they do from the United States.
Jason, what I heard from a few individuals who surround the former president is that he would come into office and actually, he talked about a 2% target, definite floor for NATO. Now he's talking about NATO allies spending potentially, one thing they will do is 3% of their GDP towards defense. How much bigger can Europe continue to spend on the U.S. defense industrial base if it's the former president in office?
Yeah, that's a good question. I mean, you certainly you get down to hard choices to do that. I mean, let's first get to 2 amongst NATO countries. I mean, NATO as a whole is already there because that includes the United States. But if you're counting just the European countries, I still think we're a smidge below 2. So let's get to 2 first. But it would be a very significant increase and lead to budgets that are 8 to 10% higher for quite a few years, maybe out through the end of the decade in order to be able to get to 3% growth. Look, I think the Trump administration would continue to put pressure on the Europeans to pay their own way relative to the United States as we go to focus on Asia. It would be a big deal. It's probably a little bit harder to do in practice that quickly, given the tough choices that you would need to make either by raising taxes or cutting spending in other areas.
Jason, we've got to leave it there. We've got to catch up. Thank you, sir. Jason Gursky there of Citi. Up next on the programme, Aditya Bharve of Bank of America, Bob Elliott of Unlimited from a beautiful New York City. 80 degrees in New York today.
It feels illegal.
80.
You love it, don't you?
Absolutely love it.
Yourself.
Can't get enough of it.
I know.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world right here on Bloomberg. Context changes everything.
Counting it down to the opening bout with equity futures just a little bit softer as they have been throughout this morning so far. We're down on the S&P 500 by, let's call it 0.25%. On the Nasdaq 100, negative by almost 0.5. 1 hour away from that cash open. Let's get you some morning movers with Manus Cranny. Good morning, Manus.
Jonathan, a very good morning to you. Boeing's had 5 weeks of pain and a cash burn of $1.3 billion. Looks like there's a third bite at the settlement cherry on the table. It will be put to the unions on Wednesday at the same time as the results to come through. So if this does get voted through, it looks like the next question for Kelly Hochberg, the CEO, is what are you going to do? How are you going to restructure this company? The existential questions about what parts of the business within Boeing remain, and how quickly can you get 737 MAX, 767 and 777 back on the production line to help your cash burn. Let's roll it over, stick with the airlines. Spirit Airlines has been given a lifeline, so to speak. They've got about $1 billion worth of debt maturing 2025 and 2026. Stock up 36% because they've been given an extension. Extend and pretend, one could say. You've got until December the 23rd to restructure your debt, and it's one of those sort of rinky-dinks that they're talking about. The U.S. Bank National Association, it's a restructuring which may lean into the loyalty programs to help them get through. Let's just close it off with a quick look at Humana. The stock was down 42% on the year. Cigna are back at the table again. They want to try and put a merger together. Putting these two companies together would create a beast. $125 billion worth of market cap. And indeed, it would let these two health insurers bulk up and fight back at the pressure on the margins in the business. Bid this morning by 4.8%. Jonathan, good morning.
Manus Cranny, good morning to you. You've been missed. Welcome back. It's good to see you back. I want to pick up on Spirit just briefly. Spirit, JetBlue. The deal that never was. Imagine if we'd been able to make that deal. I would love a conversation with the administration about what's happened here. We're not going to let this deal happen, and then this one happens.
Basically, are you going to lose more jobs because you essentially have a company that will not last if it continues by itself? And that's something that people are going to have to deal with. At what point are mergers and acquisitions something that makes financial sense for companies and for jobs? And at what point does it really become counterproductive for capitalism?
Spirit had a lifeline. They were potentially going to get the cash injection they needed. And this FTC said no because of competition issues. It's a great question, Jonathan, and it's something that would be a fascinating conversation with Pete Buttigieg.
That stock is up in early trading. Elsewhere, investors waiting for fresh economic data this week, looking for further signs of economic strength. Aditya Bharve of Bank of America writing the following: with the latest string of upside data surprises, client concerns have shifted from recession to re-acceleration. In our view, the economy is resilient, but there are enough minor headwinds to make re-acceleration unlikely. Aditya joins us now for more. Aditya, good to see you.
Thanks for having me.
So you don't believe in this re-acceleration story. So let's start there. What underpins that view?
Not yet. So we don't believe in re-acceleration yet. Let's talk about the recent data flow. Start with jobs. Obviously, fantastic jobs report for September, right? But we would think of that more like a mediocre student who aced one test. So good job. But we're not there yet in terms of, have you turned the corner, or is this really an A-plus labor market? I don't think it is just yet. right? And then if you think about the GDP, GDI revisions, the revisions were actually more to the older data, right, from early 2023, late 2022. So it's telling us a story more of a very resilient economy that's been holding on to around 3% growth in private domestic demand for 6 quarters. So it's not so much that we're reaccelerating, it's just that we've been growing well above what we thought trend was for an extended period of time.
What would change your mind? What would convince you?
So a couple of things could do it, right? The first one would be significant fiscal stimulus, but potentially after the election. But that would have to be over and above just extending the tax cuts, right? Because the tax cuts are status quo from the perspective of consumers and businesses right now. And then the other possibility is that you get a large negative supply shock. The economy is already running at potential. So with that negative supply shock, you could potentially overheat.
What is that negative supply shock? Is that sort of code for something?
Well, it could be a number of things, right? It could be geopolitics. It could be some significant disruption in terms of tariffs. Those are a few potential examples.
So you talk about the R word. It used to be recession.
Yep.
Now it's reacceleration.
Yes.
And I love this because it sort of puts into cold relief the idea that maybe this market sees the tail risk as increasingly reacceleration and not recession. Is that what you're seeing in some of the baseline data and some of the baseline analysis that you see coming out of Wall Street?
So the way we would talk about it is that 2-3 weeks ago, before we got the jobs report and the data revisions, we would have thought the risks to our outlook were slightly skewed to the downside, so more towards recession than reacceleration. Now we think the risks are pretty balanced. But the base case for us is still an economy that just softens up a little bit, doesn't go into recession, not even close, as inflation continues to move back down towards target.
Putting this all together, what are you expecting on November 7th from the Fed?
We're expecting a 25 basis point rate cut. We are comfortable with that view. Basically, the last jobs report did the work of 2 jobs reports, right, in terms of really delivering job growth. Then you had the upside revisions as well. You really had everything you wanted. So I think they'll be comfortable doing another 25, but they don't really have to do a 50 anymore.
But what if we get a really good jobs report before that Fed meeting? Is there a chance they don't cut?
The bar would be very, very high for that for a few reasons, right? If you don't cut in November, you're basically admitting that you made a mistake in September by going 50. And you've already told us that, look, we can keep cutting for now with policy rates growth close to 5% as long as inflation continues to move back towards target. The last inflation print wasn't great, but it wasn't terrible either, so they should be comfortable still cutting for now.
So given the fact that essentially you're saying it's not that the economy is reaccelerating, but we're staying around a level that seems like it's above trend growth, how much are you saying that maybe we need to reassess how far the Fed can cut? You know, the target rate has to be substantially higher than we thought maybe 2 months ago.
So this is exactly the question that I think everyone's wrestling with, right? So that there could be a few reasons why the target rate has gone up. The first one would be that inflation's just not behaving the way we want it to behave, right? But that would be more of an overheating story. The other potential story is that trend growth has gone up, right? That could be because of labor supply, but it could also be because of productivity. So the other thing that's happening on November 7th, by the way, which is a little bit wonkish, is that at 8:30 we get the revised productivity data, which will include the GDP revisions, right? Nobody's paying attention to that because of the Fed and the election.
Correct.
But I think it'll actually be quite interesting because the story around productivity could change quite a lot, and that has significant implications for long-term growth as well as the terminal rate.
How much do you push back against people who say you can already see the trickle effects of the 50 basis point rate cut through the economy? You can already see mortgage rates coming down and bringing more people in. You could already see loan activity picking up on the margins. Do you reject that, or do you actually say, yes, in a way, on the margins, it has been stimulative?
To the extent that that's happening, it's got to be very, very marginal, right? I mean, they cut rates in the middle of September. We have some of the September data, right? We don't have any of the October data right now, so we really wouldn't see it in any meaningful way in the data right now.
Aditya, always good to catch up with you, sir. Aditya Bharva there of Bank of America. Distracted around the table just a little bit with news out of Disney. So check out Disney in the pre-market. This is what the stock is doing at the moment, just slightly positive. James Gorman of Morgan Stanley taking on a closer role at the company. The director in charge of planning for a successor to Bob Iger will become the chairman in early 2025, January 2nd to be precise. The executive chairman currently of Morgan Stanley, of course, that particular position, that term for that ends at the end of this year, and he's not not going to take much of a break, Bramo. He's going to take on the chairman role over at the Walt Disney Company. As for the CEO, we were waiting for an announcement. Succession. Give us the plan. Well, we've got a date. We expect to make an announcement in early 2026 to find out the replacement to Bob Iger.
So essentially, Bob Iger gets to stay at the helm of this company for another year. But James Gorman, what I love is that when he was retiring from Morgan Stanley, he was talking about he doesn't know what the next thing for him is and that maybe he'll take more time. This is sort of more time is to head over to Disney.
Well, he's busy doing other things. The Walt Disney Company right now, the pre-market positive by about 0.1%. We'll recap the details of that for you in just a moment. Looking ahead to a week full of economic data, plenty more Fed speak as well. But the one to watch is the next few weeks after that. When we get a payrolls report in a few Fridays' time, then the week after that, the US election in America, 2 days after November 5th, you've got a November 7th Federal Reserve interest rate decision. With us around the table, Bob Elliott of Unlimited. Bob, it's good to see you.
Good to see you.
Show. Let's get straight to it. In the bond market, yields are higher. Tell us the why. Why do you think this is happening? Why are we up by close to 50 basis points on a 10-year since this Fed cut rates by 50 basis points?
I think it's the perfect instantiation of the over-easy monetary policy that the Fed is pursuing. I mean, it is very unusual for a Fed to engage in aggressive cutting in an environment where we see real GDP growing at 3.5%, where we see the GDP gap basically at its highest level in several decades. And we see asset prices as strong as they've been, spreads low. That is not the type of economy that typically would get significant easing ahead. But the Fed is committed and the direction is clear, as Chairman Powell has said.
The bias is to cut interest rates. And that goes into an election where we could see even more debt issuance. When you start to think about where yields could go, we've got numbers on the Bloomberg today, people talking up 5 all over again at T. Rowe Price. Where do you think that yield is going right now?
Well, I think when you think about what's going on with bond yields, the key risk for rising bond yields is that you start to flow through to hitting stocks, right? Because bonds are in the stocks, whether you like it or not, and that discount rate both affects stocks directly and then, of course, starts to tighten economic conditions. And so moves in this range, we could probably withstand another 30, 40 basis points of 10 years moving higher before we start to run into some concerns that that's going to create a drag on the economy. And you're starting to see a little bit, mortgage refis have come down, mortgage activity down a little bit as mortgage rates have raised on the long end. And so, get a little bit more, 40, 50 basis points, that's when we start to get the concern. But there's a long way between where we are right now and getting up to those levels.
What are you pointing to as evidence that what we're seeing from the Federal Reserve with additional rate cuts is accommodation and not just normalization?
Well, I think the basic question is, what is neutral policy right now? And the Fed will give lots of different quantitative examples of and various models about what neutral is. But I like to look at neutral as an empirical question. And empirically, if the economy's been growing at 2 or 3% for the last 8 quarters, and inflation is above what their mandate is, and unemployment's at 4%, give or take, that's a pretty good economy at today's level of rates, and it's been a pretty good economy while these rates have been at these levels for an extended period of time. So I'd argue, at least in a time frame that anyone cares about, basically rates at these levels are neutral, not rates that are considerably lower.
If that's the case, do you actually see the potential for inflation coming back as a more serious concern? Is there a way that you're playing that through how you're positioning?
Yeah, I mean, if you look at the situation, we could have one of two paths. The first path is that the markets start to recognize this over-easy policy and start to price that in and actually get ahead of the actual economic conditions. And that's mostly what we've seen. Gold's up relative to bonds. Stocks are up relative to bonds. That's all indicative of the markets catching the Fed and saying too easy a path ahead relative to how strong this economy is. Otherwise, we'll have to wait quite a while before the actual stimulation at today's levels happens. We get a tightening of the economy, we get wage growth, and then finally we get inflation. But much more likely, we're going to see the markets get ahead of that, and that's exactly what we're seeing.
I loved your tweet last week. Gold and stocks greater than bonds. How much higher could we see gold? Because it feels like every day lately it's been a new fresh record.
Yeah, well, I think gold, the key thing to remember on gold is gold is a global asset. And so often we're here sitting in the U.S. thinking about gold relative to U.S. rates or U.S. real rates. But the vast majority of demand for physical gold is coming from China. And the direction of travel in terms of Chinese policy making is pretty clear right now, which is easier policy, ahead, including what they announced, in the last day or so. And so, given that circumstance, you're going to continue to see a lot of demand for gold out of Asia as folks are looking for safe havens, right? It's not in their housing market. The stock market is, a bit of a casino. If you're really trying to, preserve wealth in the Chinese context, gold is the way to go. And it's no wonder that what we're seeing is easing out of China today, which is then having a knock-on effect of raising global bond yields and raising gold prices at the same time.
Mohamed El-Erian has a column today in the Financial Times talking about how the West needs to pay more attention to what's going on in gold, because it's not just about a hedge or geopolitics. It's actually the fact that there might be de-dollarization. This is what happens when you have things like sanctions and tariffs. Does that mean that basically 2025, 2026, gold is just a place that we'll see more and more of these central banks dive into?
Yeah, I mean, obviously the central bank demand for gold has been very strong, particularly from those countries that are antagonistic to U.S. interests. I think the main thing to recognize with gold is we've got a $50 trillion global government bond market, and just a 1% move out of those bonds and into gold would be a huge pressure on gold to go higher, because it's just very hard to create supply in the market, right? In gold, the way that you get incremental supply into the market when there's monetary demand is you have to scrap, because essentially all the demand for monetary gold that's being produced right now is already being met. So you got to figure out ways to scrap gold, and getting that, how do you get people to put cash for gold, respond to cash for gold ads on the television? Prices have got to go a lot higher to get that to happen.
I love that. Who are those catering to? Honestly, whenever I see that, I think, okay, what's the demographic?
Doomsayers.
Yeah, well, and also a certain age group. But I am curious, going forward, about how you view sort of the connection between yields and oil prices. I mean, a lot of the relationships have gotten a little bit skewed. And one thing that we keep talking about is that as oil prices go up, bond yields go up. Do you think that that's part of it, or do you really think it's entirely this macro story speaking to Fed?
Well, I think if we look over the last couple of weeks since the Fed laid out their over-easy policy, oil's traded choppily flat, and we've gotten this bond yield move. And so I don't think oil is primarily the driver. I think the big risk here, though, is that it wouldn't take much in terms of constrained supply in the oil market to create a spike in prices. And that is the worst case scenario for the Fed. Imagine, we're standing December 1st. We have a new administration that's very focused on tariffs. We have oil prices that are rising due to global conflict, and we have a strong economy. And that's going to be a real challenge for the Fed to navigate as they enter 2025.
Bob, this was great. It's good to see you. Thank you, sir, for breaking things down. Bob Elliott of Unlimited on the outlook for the next few months. The outlook for November, that first week of November. If we get a red sweep, certainly not a base case right now for many of you, I know, and not guaranteed. Nothing is. But if we get one, let's do some scenario analysis. We said on this programme earlier on this morning, you could envision quite easily yields moving 50 basis points. What would interest me that morning and the morning afterwards for the next several days? Are yields climbing because growth is going to be stronger, inflation might be hotter, the Federal Reserve has to maybe reconsider cutting and consider hiking, or are we getting a legitimate buyer's strike in the Treasury market accompanied with a sell-off in the FX market on the US dollar? We didn't see that when yields started to climb higher over the last few years in this country. It was typically accompanied with a stronger FX market, a stronger US dollar. If you get something different, and we got a little taster of that in the UK, where gilt sold off and the pound got weaker, if you get a little bit of that in America, all bets are off.
Well, Terry Wiseman was talking about that would be basically the shift and the undermining of American exceptionalism if you get a dollar sell-off in tandem with higher yields. It's sort of the equivalent rhyme with a Liz Truss moment, and that is one of the big concerns.
Yields up this morning, 5 basis points, 413.22. With an update on stories elsewhere this morning with your Bloomberg Brief, here's Danny Berger. Hey, Danny.
Hey, John. As you mentioned, changes are coming to the C-suite at Disney. Shares unchanged this morning, with the company named Morgan Stanley Executive Chairman James Gorman as the chairman of its board, effective January 2nd. He's currently the chair of Disney's board succession planning committee, which is working to identify the next CEO. Disney planning to appoint that new CEO in early 2026 to take the reins from current chief Bob Iger. Elliott Investment Management and Southwest Airlines may be heading towards a truce. According to people familiar with the matter, the two are discussing a potential settlement that would avoid a proxy fight for control of the airline's board. Elliott has proposed a framework that would give it representation, but not control of the board. The talks haven't been finalized and could fall through, according to the people familiar. And Anne-Marie promised I'd give a baseball update, so this is for you, Anne-Marie. The LA Dodgers are heading back to the World Series after eliminating the Mets in Game 6 last night. They'll be facing their longtime cross-country rivals, the New York Yankees, who are back in the Fall Classic for the first time since 2009. It'll be a battle of the league's top superstars, with Shohei Ohtani and Mookie Betts gearing up for LA, and Aaron Judge and Juan Soto representing the Pinstripes. And tough luck for those looking for a bargain on ticket prices. As of this morning, there are 0 tickets available for under $1,000 for games in either city. And that's your brief, John.
That's not a shocker to me at all. Danny, thank you. Outfit change around the table once again.
This is going to be such an expensive World Series. I thought you said you were coming with me.
No, not now. It's a midweek game. I'm a weekend guy only. I can't do this job until
This is why I'm upset with the Mets.
100%.
One, I really wanted the Mets to win. I really needed the Mets to win so that the Dodgers and the Mets, whoever the Yankees were up against, we exhausted them before that game. But then also, if the Mets won, we could have all went to the game. Me and you, Lisa,
Yankees
Friday
would have had
night.
a home game at the weekend, but that's not how this plays out. Lisa doesn't want to talk about this, so
I think that
we're not going to talk about
we should talk about bond yields. I think we should talk about auctions and the beige book.
Talk about Boeing next. Bond yields, auctions,
Yankees.
beige book, sprinkle of Yankees at the end. Up next, we'll set you up for the week ahead. The Trading Diary, just around the corner.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, created, when you're solving a problem that's real for you and therefore real for the consumer.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
DOJ or other authorities.
Could face bigger challenges next.
It was going to keep Green World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Equities down just a touch. We're negative by 0.2%. Bond yields higher by 5 basis points, 413.42. As we count you down to the opening bell, here's the trading diary, the calendar, the week ahead. The IMF full meeting begins today. Tuesday, results from GM. Wednesday, Tesla and Boeing report. Thursday, another round of jobless claims and PMI data, plus more earnings from UPS and American Airlines. And on Friday, durable goods and UMich consumer sentiment. As we look ahead to Boeing, the stakes high for earnings as union workers also vote Wednesday about whether to accept the plane maker's latest offer and end a 5-week-long strike. The stock is up by 3.4%. Joining us now, George Ferguson of Bloomberg Intelligence. George, it's a decent offer. Walk us through that offer and whether we can close a deal.
Sure. So I think the biggest point of the offer is Boeing's come back to about a 35% increase in wages, which seems pretty good, although a little bit shy of some of the 10% gains we've seen for organized labor in the marketplace. I think they've sweetened some of the 401k. They've talked, I think, about more matching, I think up to 12% matching. They've talked about providing, like, I think a $5,000 incentive into the 401k. But, you know, those are numbers I've kind of looked at this morning, you know, quickly. So some of them may not be perfect, but I think you get the point, and that is they're trying to go back at the 401k, which is, it's been a challenge because the unions said that they wanted a pension, a return to the pension, which is really very difficult, again, for U.S. corporations. We haven't seen anybody roll back towards a pension ever, I think. And I think going ahead and trying to sweeten some of that increase in pay, but like I said, I think still a little bit short from what we've seen in the marketplace. So it'll be interesting to see how the whole you know, this proposal goes down on Wednesday.
Just 30 seconds, George. How much can this company provide guidance without certainty about whether they will get a ratified deal?
You're not going to get any guidance. I think you're not going to get any guidance. They're not going to be ratified by the end of the day. You'll get nothing.
George, appreciate the update, sir. George Ferguson there of Bloomberg Intelligence. Setting the bar pretty low for Boeing earnings in a couple of days.
Just to consider this. It costs them an estimated $100 million per week that this strike goes on. This is 33,000 people. How do they provide guidance when they're basically hemorrhaging cash and they don't know when they can get things back online? So the key question is, how low is that bar for them to actually walk over at a time where there is this much uncertainty?
You think 35% gets it done? Feels like it might.
I mean, I don't understand what the holdup was, because it was sort of this long-term parameter of what the future looks like, and that has to do with pensions. I don't know what kind of nod they got from the White House, because that was part of the discussions. A lot of question marks around this, especially without the union leaders signing off on this deal.
It's not the only challenge this company's got right now, and we can all agree on that. The stock is up by a little more than 3% in the pre-market. Coming up tomorrow, we'll catch up with Cameron Dawson of New Edge Wealth. We'll speak to Torsten Slok of Apollo. The RBC CEO, Dave McKay, is going to join us on this programme. And we'll speak to Gilles Moek of AXA. From New York City this morning, good morning to you all. Thank you very much for choosing Bloomberg TV. This was Bloomberg Surveillance.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
What legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working, then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow. I'm not the right one to just do that.
I think you are.
Yeah. But with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice than to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of sales. No, myself 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
What about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
Good Monday morning, 30 minutes until the start of the cash trade. I'm Matt Miller.
I'm Sonali Bassett.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
And the good times may be over. Goldman Sachs is out with the warning that the S&P 500 is not likely to sustain their performance of the past decade.
Plus, Boeing union workers hammer out a tentative agreement with the plane maker ahead of earnings. The vote not until Wednesday.
And we'll take a look at surge and activist activity as Starboard reportedly takes a stake in Kenvue. All of that and more coming up, but let's take a look at markets 30 minutes until the bells ring. A little bit lower pre-market, but remember the S&P 500, the NASDAQ 100 closed out on 6 weeks straight of gains last week. So taking a little bit of a breather this morning, down a touch on the S&P, down a little bit more on the NASDAQ 100. All the while, that sell-off in the bond market reigniting, Matt. You can see the 10-year yield higher by about 5 basis points now at 4.13.
All right, a couple of calls out today. Goldman Sachs says people are going to start buying other things in stocks. And you can see here from this chart,
how are you today? I hope everyone had a beautiful weekend and ready for another week on the market.
Warren Buffett, Morgan Stanley says the bond market treasuries are well positioned to deal with the red sweep in November.
Stock and bond just nearing the middle of the earnings season and very close already to the U.S. election, which is going to happen in 2 weeks, traders, in 2 weeks plus 1 day, because on the 5th it's going to be the vote. So actually very exciting weeks are ahead of us. Hi Steve, good morning to you. Okay guys, so let's see what's going to happen today. Not too much has happened during the weekend actually. On Friday we got another green day on the market, so not a big surprise as usual. Today, though, we do not have too much news so far. I mean, especially on the earnings side, because actually today there is no big earnings. Okay, so no big earnings, but not like just for the rest of the week, because Tesla and Amazon.
Really incredibly bearish if you take a look at the rest of the sell-side community. It's interesting. The report is over 30 pages long. I'm working my way through all of it.
The economic calendar is quite silent. We have the CB leading index and some FOMC member speakers, but actually that's it, not that busy either. So today is the 21st of October. Wow, we are just heading to the end of the year as well. Unbelievable. So indeed, today the IMF meeting started by the day. By the way, this is the first day of IMF meeting. CB leading index going to be released at 10 o'clock, and we are over already FOMC member Logan's speech, and she was quite of a, let's call it party crasher, because she just warned that might the inflation can spike again. So actually the US government, the Fed, and everyone else should be a little bit more cautious with the rate cuts and so on. So she was not particularly positive, and maybe this is the reason why we do see now the market, if you just check the pre-market, it's quite red, not very red, 0.22%, but we are
very much translate
now get used to this red mornings on Mondays so much. So actually, both of these kinds of people are starting in red. It can be again, first of all, because we know it's a very much all-time high environment. Second, Logan speech was not particularly positive at all. And third, as I told you today, we lack a little bit of
so a bit bearish to your read. Let's sit on this call a little bit longer
trigger
because I do think it's interesting that David
but
Kostin,
if you just take
he
a look
actually
at the
raised
daily
his
chart
year-end
traders
target
on
on
the SPY,
October 4th,
you still
and
can
his target over the
see
next
that
12 months for the
everything
S&P
is
500
bright and
is
green
6,300.
still.
That's about an
Very
11%
strong
gain
bullish
from here.
sentiment.
So his
So
idea is
in
that we're
the
going to have a
last
good next 12
week,
months. And then maybe, of course, like Sonali said, a slow bleed here. When you think about
the SPY and
the
the Dow
trajectory that
as
this
well.
market could take,
Also, I must
does that
tell
sound
you
realistic
that
to you?
this is still a quite of an ugly
But then again, we have to remember we have a pivotal electoral event coming up in a few weeks, and that could well have a kind of bifurcated outcome.
To see a reversal. I don't think so. We will see a reversal, by the way. I would say it depends on the Magnificent 7 now, because actually, as you know, so far, regarding the earnings season, it's quite a great start for all over the market, and especially for the banks, because so far, the banks released a majority of the earnings season. So far, it was about the banks, and as we know, the banks just made a really good run and great earnings so far. Also, the Magnificent 7, as I've told you, especially today and last week was a good one, but this week, as I've told you, especially the Tesla and the Amazon is going
It's interesting
to
at the moment, and over the next few months are really easy to latch onto, particularly given the election.
I would say that if the Magnificent 7 is going to release earnings similarly to the banks, we will get the trigger with the market to go higher. Also, if they're going to miss the expectations or they just spook the market with some nest guidance, this can happen actually. By the way, in this case, might be a present drop on the market. So far, Tesla and Amazon, both of the Magnificent 7 report earnings, as I told you, Tesla's recent robotaxi event, as I told you, fell flat, while Amazon's high valuation has pushed investors to cheaper alternatives despite its cloud growth, and Amazon's pending outlook on AWS will be closely watched, especially for its impact on NVIDIA, as it is a case of Liar and group.
Because spreads are that tight, and we see the base rate coming down, we don't see that being as meaningful.
So as you can see, I feel like it's not going to be that easy to beat the expectations on the Magnificent 7.
We need to have diversified exposure in stocks.
Okay, guys, two more FOMC speakers are coming today, by the way. Actually,
famous for his shorts,
but only one is going to be during the market hours, and he's going to be Kashkari. Okay, Kashkari's speech at 1 p.m. So let's be careful, right? So 1 p.m. Kashkari's speech. After that, 5 p.m. Schmid, and very late on the day, 6:40 p.m. Dali speaks as well. And that's it. No more economic news for today. But at least we have some movers, like Boeing got some news.
Yeah, but even
not
imagine
bad
if they did it
news,
10 years ago,
actually,
or
because it seems
40.
like
I was
they
just
will
looking
reach
at
a deal,
a data
and
track,
seems like for
note
that
this
news
morning,
going to just moving higher now very nicely.
I think
So
the
I'm
guy
going
was
to
Henrik
going first to my
which is a strange
long
name. That's
list.
why I remember a paper
You just
from
check the
2023
daily
where he
chart on the
said
Boeing and
literally
especially the free
all
market.
of the
You can see how
positive
nicely
stock
it's
market
just
returns
jumping
from
now
1990 to
over this
2020 are down to
$160 level
2.4%
and
of stocks. So it's basically
551,000 in the free
technology
market. So
innovation
you
that
like
drives
BA
all of the
on my
expansion of the
long
market.
list. Traders, if you have anything on the list, please just let me know. Oh, in the meantime, I forgot about the stock exchanges all over the world. Not too much to talk about. Japan was higher. I mean, the Asian section, it was a little bit higher. It's actually they just rallied. The reason for that,
we've seen a lot of interest in AI-focused funds,
again,
themes,
some China stimulus
focused
hopes
around
and
digital
so
assets,
on.
and much of
European market started quite mixed, and seems like they're just ending with red, like all red as well. And on the crypto side, the Bitcoin could not break this 70K last week, so this still looks like quite of a strong barrier. Also, there is no doubt that Bitcoin is on a run for a while because of the speculation for Trump.
To be frank, I mean, where do you think we are
on
the AI investing
hype versus Bitcoin reality it's taking like a down deal that Trump is going to be the next president again, and indeed that's why we have seen a very nice run in the recent 2 weeks on the Bitcoin. Hi Ali, good morning to you. Lee, good morning. Martins, good afternoon. Nice to see you.
The use cases,
yeah, definitely happy Monday, everyone. And as I see, Amir is back from the holiday. I hope you enjoyed it, Amir. Welcome back. Good afternoon to you. And let's just make a little summary quickly. So for the newcomers, no big news for today, guys. I mean, CB index at 10 o'clock. No big companies' earnings today, but Tesla and Amazon coming this week, actually. On the stage, plus some FOMC member speakers we are expecting, especially Kashkari at 5 o'clock, and Logan already made the speech, and that was really positive, actually. She's afraid of a inflation rebound, so let's just take it easy in the beginning, because it seems like the futures are red and the market is red a little bit. Hi Mark, good morning to you. But I've called BA already to the long side, because BA actually just got a really good news. Looks like the deal is ahead, and no more strike coming, at least so far. And like that, this is definitely a great news for Boeing, which is up 3% at the moment. Okay, what else among the big movers? We have some good news for Canva. This is the first one. This is a consumer health company. By the way, it's 8% higher, because Wall Street Journal said actually investors' stockholder value has taken a stake in the Johnson & Johnson spin-off. So it seems like this is a great start for the stock. Let's just see.
Given the
how does it look like
for some of these operators. All right, Ethan, gotta leave it there. Really appreciate you kicking off the week with us. That is Moneta, Chief Investment Officer, Ethan Devitt. And guys, just to marinate again in this costing call a little bit longer,
already over 5%. Very nice reversal on the daily chart. I really like it. It's just back to the $23 area, but as you can see from the past, it is quite of a behavior after a gap that it still can go after quite of a decent gap up. So I'm going to call it, because of that, my long side also. Keep in mind, this is not a huge reverse, so I'm not expecting like $3-5 on this one, and this is just a lower price stock. Hi Adino, good morning to you.
It's important to point out
okay, next one, doing as I've told you, that this just got a nice
Morgan Stanley today coming out and saying, Warren Buffett there saying that bonds are well positioned to deal
higher
with even a red
as the
sweep.
aircraft
So
maker
even
and
if
its machinists
wins,
union
and
reach
the
a new
Republicans
contract
take the Congress and the
proposal that
Senate,
could end
he still
amongst
thinks we're going to do better than we did in
strike.
2016
Well,
when the yield
tell the
rose
truth,
50
guys,
basis points in
this
6
is
months.
Well, we'll
one
have to
of
see.
the
We know
best
that the bond
news
market
for
really has
the
been the
bank for a
epicenter
while.
of
It
volatility,
just got
even
really
relative
bad
to the
news
stock
after bad
market.
news
And
after bad news.
speaking
So
of the stock
let's
market, let's
see
take a
whether
quick check
they
on futures.
can just
Lower
make
today after
a
6
nice
straight weeks of
recovery
gains
from
on the
here.
S&P 500, on the
Definitely
Nasdaq
am going to
100.
put it on
You
my
train your
long
eyes
list.
on the small
Next one
caps,
is
the Russell
Warby
2000.
Parker,
Earlier
eyeglass
outperformed, but
retailer,
not by much,
5%
and still down
higher
about
on
a
the
tenth
heels of
of
a
a
beautiful
percent.
Goldman
Meanwhile, let's
Sachs
take a look
upgrade
under the
to a
hood
buy.
now. Take a
This
look
is
at what
kind of
stocks
a
are
strong
moving with
upgrade
Abigail
and
Doolittle.
One
see
stock
to the
dragging
buy
on the future,
side. So
specifically the
let's see
S&P
how
500
the
and the NASDAQ 100. Tesla,
I
after
remember
gaining more
right,
than
this is the
1%
symbol.
last week,
How does
giving those
it
gains back right now,
behave?
down about 1.4%.
Very nice. I
Lots
just
of
have a
chatter
big problem with
out
the
there
pre-market
on
volume as
robo-taxi
it's barely
and what
reaching
its outcome could be,
28,030
both
now.
positive and negative.
Not
And
bad,
plus,
but not
Tesla
the
does
best.
report
You
on
know what?
Wednesday,
I'm
so
just
shares a
going to
little
give
bit
it
lower
a
ahead
chance
of
on
that
my long
event.
list.
We have the
But
airlines. The last time I
careful
looked,
with that
also
one
lower, broadly lower. There is
volume.
some
Humana
news
in
on
the
Southwest
news shares of
Airlines
both
that Southwest
companies, not just
Airlines
Humana,
and
but
Elliott
Cigna
are
moved
going to
in
try to
opposite
work together
directions
as
after
opposed to being
Bloomberg
in
citing
a
people
fierce
from near
proxy
reported
battle.
that Cigna
Oil higher
resumed
by about
merger
2% or so. That could
Humana.
certainly be a
The
macro
stocks are
drag.
in
And
early
then finally,
stages.
to the
According
upside,
to Bloomberg,
finally,
Humana
Boeing,
gained
it is
while
trading
Cigna
higher,
fell
up
on the
3.6%.
similar,
They, of course, have reached tentative
okay,
deal
so
with
let's
their
see
union,
Humana,
which starts with a
which is the
35%
winner of the
pay
news,
hike.
and
Investors
Cigna,
relieved,
which is
and
just going
Sonali,
down.
very importantly,
Oh,
this
Humana
is in some
is
ways
just
one
2%
of new
higher.
CEO Kelly Ortberg's
Not
first
bad.
moves.
Also,
They
the
report this
pre-market
week. We'll be getting
just
more of a flavor
acting
then.
a bit
Wednesday,
weird.
certainly
You
a big
see,
day for Boeing.
actually,
Abby, thank you
this
so very
news
much.
is not
And coming
that
up, we're going to bring you
new
more
because
on
it
Boeing,
happened
what to
Friday
expect
after
from
market
that vote
closed.
on Wednesday.
I don't
and
know.
earnings,
This
of
is
course, as
acting
well.
a little bit
This is
weird.
Bloomberg.
Pre-market volume not bad, also 60,000 compared to the fact that this is a $274 stock. It's a little bit shy. I'm going to put Humana to the long list, but let's be careful, traders. I feel like this is going to be a quite of the let's call it spready and maybe volatile stock. Let's see Cigna, CI on the other hand, which is lower on the news, as you can see, it started on Friday already. Let's see if it's going to be continuing on the CI. I'm just going to put it on my list to the short side. Next one, UPS, 2% lower after a nasty downgrade to underweight from equal weight by Barclays. So buy the UPS. Seems like it can go to a short list. Let's just take a look at the daily without checking the daily. Better make a decision.
Big tech earnings stick off later this afternoon.
Long side. At the moment,
we have take two
yes,
numbers back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
And even if we check 130,
Get ahead of tomorrow's trading with The Close.
can get
Weekdays
down.
on Bloomberg. Context changes
And
everything.
like that, it can be actually a double top. I'm just a bit nervous.
So a number of people, I think, from Homeland Security and or
gap
the
here on
CIA
the
or
daily
NSA have
VC,
gone to
so
Capitol Hill
started
and
to
said
gap
that
back then in July.
TikTok is a danger to our
I
national
don't
security.
know.
But the
Why I'm
public,
hesitating
hasn't
to
been
call
given
it
that much
100%
detailed
to the
information
short
about
side.
what the
Even
threat is.
this is a quite of
How
a
much
nasty
of a threat to our
downgrade
national security
because I've
is
seen it already several times.
The
But okay, that one investment
People's
house,
Republic of
things
China,
like that. And it has the reason, actually, let's see what is the
adversely
reason of the bank.
to the
The bank
interests of the
said
United
it sees
States
the risks
in
to the
different
package
ways.
delivery companies'
Um,
earnings as
one
well
of
as
those ways,
competition from the Amazon.
is through
Well,
the
let's just
dissemination
make
of
it,
disinformation,
make it as a great
the
reason,
intentional
actually, because
communication
Amazon
of
is
false
really doing great
statements.
nowadays, as you know.
And
But
TikTok
let's
is
see
an
UPS.
extraordinary
I'm going to call it to
avenue
the short side, but
through
I'm going
which
to be
to
cautious
disseminate
with that. Reason for that, as I
disinformation
told you, the
to
daily
millions and millions of people.
can go either way, especially because of the big push from this.
Bringing you up to the minute geopolitical
Yeah.
news whenever
Okay,
and
hi
wherever
Jennifer.
it happens.
Good morning to
I'm
you,
Stephen Engel
and
at the
welcome
Forbidden
everyone.
City in Beijing.
Just
and
joined.
this
I
is
hope
Bloomberg.
everyone had a beautiful weekend. I'm just making the usual candidates list, and That's
bigger
was going to guide and
This is a 3 as the economic picture.
guidance / test. No? Okay, GD.com, it's the next one, tiny stock. It just fell more than 1%, mirroring decline in Hong Kong's Hang Seng Index. JD.com witnessed this title upgrade to buy from
Let's
all
get out of
by
high interest and look at what's making
markets.
headlines
So let's
around
see
the
how
world.
JD,
Israeli Prime
and
Minister
others
Benjamin Netanyahu
are
met with top aides
moving.
over the weekend
Wow,
to discuss
that was
retaliation
good.
against
Just
Iran. This comes after
actually
a
interested
Hezbollah
in
drone
PDD, but
penetrated
that
Israel's
was
air
a
defenses on Saturday and
tricky
exploded
stock for
next
me,
to
guys, last
Netanyahu's
week.
private
Actually, on
residence.
Friday,
the U.S. is
we
also
tried this
investigating illegal
long
classified
from the
documents
200
assessing
EMA
Israel's
on the
plans to
daily,
attack
and
Iran,
it did not work.
according
So
to
actually, seems like the
More
PDD
efforts
might
to
want to
stimulate the
cancel
Chinese
over as
economy.
well,
The country's banks
1.78%.
benchmark
So
lending rates. It's the
I
latest move
find
in a
these
series
Chinese
of
stocks
measures to
sometimes
revive growth and
tricky.
halt the slump
They do
in the
not
housing market. The
react
25
on
basis
the
point cuts
technical
were bigger than the 20
pattern.
points expected
That's
by
nice
economists
most of the
surveyed
time,
by
so be
Bloomberg.
careful with days.
Elon
I know, for
Musk's
example, Amir
super
likes
PAC
this
is
stock and
pledging to give
trading
away
the
$1 million
stock very
a
nicely.
day
I'm a bit,
until the
usually I
election
just
to
keep
someone who
a
signs a
some
petition
distance
calling
from
for
Baba
free
and
speech
PDD,
and
but
the right
at the
to
moment
bear
seems like
arms.
if
In a
it's
post
going
on
to
X, Musk
make
said
a
his
break
group
under
will pick
the low
a random
free market,
registered
might
voter in
be
swing
the
states to win the prize
downside.
through
Actually, if you
November
just
5th.
check the break of the pre-market,
All right, here's a
it's
stock
going
that
to
we're
mean that
watching.
it's going
Boeing
to
and its
start,
biggest union
filling
workers
that
have
gap
hammered out
from,
an accord that
from
includes
the
a wage increase of
24
35% over 4 years.
benefits
It's
of,
tentative now. A
September.
ratification vote
So
is set
looks
for
like
this
as an ideal
Wednesday, the same day
short
as the
candidate.
company's
Also,
earnings. Let's,
again,
of course,
I'm
bring
going
in
to
now
be
Benedict
careful
Campbell,
with
our
it,
global
but this
editorial
just
leader in
triggered me
aviation,
on
for
Friday
the
as well.
details.
Mark,
And
very
break
much
this down for us. Of
appreciated
course,
your
we're approaching
watch list
Kelly
as
Ortberg's
always.
first earnings
CMT
report
Chipotle,
as
yeah,
CEO, and this is a
FPNT,
tough
you are
time.
a
What does this
definitely
mean for the
uranium
different
stocks
interlocking
traders.
issues
If
that
you
Boeing
missed
has?
my opinion about the
so Wednesday suddenly
robotic
turned into a
stocks,
very busy
uranium
day for
stocks,
everyone
and
involved. Kelly
actually
Ortberg will
even
come out with
the
the earnings.
how is
That's
it called? The
first.
nuclear energy, why uranium stocks
and then
and
sort of throughout the day, the
nuclear
voting
energy
starts
stocks are
by the
going
workers
up.
in the Seattle
If you want
area,
to know the
which
answer,
means
please just
essentially
subscribe
Ortberg
on the
will
test
release the
newsletter.
numbers
I'm
with
writing
kind of
every
one
day
arm tied behind
with
his
some
back because
really
he won't
great
know what the result
updated
is,
news
and that's really the
from
one
all
big
over the
outcome
world,
that
but
everyone's
especially
looking
from
at.
the US market
so
and
it'll
the
be in
US
the
stocks,
evening
because
in
actually not
Seattle,
only
by the time
Google
that we
and
find out
Microsoft,
whether
but
indeed
even
workers
Alphabet
agree
or
with his
Amazon
latest proposal.
just joining
as you said, it's
nuclear
tentative,
energy
or
investment,
whether again
and
they turn it
indeed
down
this
and the strike
is
continues
hyping
and we
up
go
all
back to
of
square
the
one.
uranium
Sort of the
stocks,
anecdotal evidence, if you look on
on.
some of the
So on
Reddit
my list
forums and
is
if you
definitely going to
hear
be
some of the
URA, and
workers'
not only
voices,
URA
it
but
seems there's
VSD as well.
broader agreement
For
to go
today,
along with this.
this
They
is on
have
my
to get
secondary
50%
list.
plus
Thank
one
you, Mark.
to get this over the hump.
ST
So
and
there seems to
Oxy
be
as
a
well,
little
like
bit
the
more optimism out
oil
there, and
stock
certainly
is
if you look
starting
at the
to
market
pull
and the
back
market
nicely.
reaction,
So
there's a lot of investor optimism
Oxy
that
as
this
well.
is the offer that gets
And
them
one more
over
which
that
I'm
line.
watching, it's ASML traders, as this is down 1% after Bernstein lowered its price target on the Dutch semiconductor equipment stock. The bank said it sees a challenging outlook for 2025.
The
So
investor
this is
side
not
is
a
obviously
good
looking at
news
this
for
very
the
closely.
anyway
We saw
beaten
from
down
the
stock.
rating
As you
agencies
know, this
that
was
they
a
are
really ugly
considering cutting
surprise
Boeing's
on
rating
the
to junk. They're just
on the
one
earnings
level
side.
above,
I'm going to call it just
junk
to
rating
the
at the moment.
secondary list, but
Boeing went
ASML
to investors over the last couple of weeks
for
and came out
today.
with a sort of
All
tentative
right,
plan
Roblox,
last
I've
week.
seen you just
They
wrote it,
filed
one of my
to register
favorite
for a possible
lower
capital
price
increase
stock.
to the tune
All
of
of
something
them
like
are in
$25
red,
billion
as
in
I see
stock and
PKNG,
equity. So it
PSTF,
wouldn't all be
PLTR, even the
equity.
SPY still
But
in
that's sort
red,
of the
and
size that we're
Chipotle
talking
more
about to
to the
write
red
this
side.
company.
But
They would do that over the next
guess
3
what
years.
is in
And the
green?
fact that
Of
they
course,
got that
NVIDIA,
registered
the
means
only
that
green
they've won
big
themselves a little bit
tech
of
stock
breathing
which I
room
see
here,
here
bit of
around,
breathing
and
space
Meta is
to
trying as
get
well,
these
and of
next
course
steps into
Netflix.
into
So on
shape.
my watch
That
list is
includes the
going to
strike.
be on
That
the secondary Netflix, and to the long side,
I'm
just
the
going
strike has done, it's
how
really disrupted the
now.
production, and that's
On
the
the
first thing
daily
I'll need
chart,
to get back up.
still this 140. Let's see if NVIDIA can break this 140 again. I would say if it's breaking,
the shorts behind it, not looking so good these days.
Candidate as well. But let's just wait until the market opens. First 30 minutes, of course, because Monday first 30 minutes can be a bit problematic. Be careful with that. And if the GQQ is making a reversal, I'm going to watch, of course, Magnificent 7 to the long side at the moment. Just watch them, but not touch them at least yet. Okay, traders, coin is down as well. I'm just taking a look at the Bitcoin related stocks. Bitcoin is back under 68,000. It had just a big drop under 68,000, so let's be careful. with the Bitcoin-related stocks because it's just pulling back now. GIM integrated, which is still on my list, it was pretty strong on Friday, and I've just seen one more. SCBG, like the solar
as we bring you the first trades across Europe.
We'll debate the most important
well.
stories.
So we
and
have
we'll
enough
drive the big
plenty
investment decisions
nice
throughout the
candidates
morning.
also.
I'm Guy
Please
Johnson.
be
I'm
careful,
Gupta.
especially for the start of
Join
the
us
day.
every
And
weekday
so
morning for the
Monday
evening trade,
30
live
minutes.
at
It's
7 a.m.
legendary.
here in London.
Quite of,
Only on Bloomberg.
crazy. So I wish you a beautiful
Changes
free
everything.
start, traders. Hi, Scott. Good morning to you. In the meantime, Scott just arrived. I'm sure you are going to be in great hands with the guys, and I'm just going to move to the guidance.
It's a
for
multi-trillion-dollar industry.
traders.
We'll
By
show
the
you
way,
what's
if you
happening
have
in
any
ETFs
questions
like
regarding
no one
the
else.
best packages,
Bloomberg ETF
newsletter,
IQ,
anything like
Monday
that,
on
please
Bloomberg.
just let me know.
Middle East
My
and
email,
Africa.
more than happy
Vibrant
to help you.
resources and
Have a
high-yield
good
investment
one. Again.
opportunities
Bye.
abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Traders, top of the morning to everybody, and welcome to the 44 Trading Room, and welcome to a Monday morning start of a fresh new week, coming off of a, I would say, decent week last week. Not great. I think the answering some emails this weekend, the market has been just okay the last say 3 weeks right now. The volatility is there. The direction is kind of skewed. We've had a lot of those up and down days, and it looks like this morning, looking at the futures this morning, probably will have that again, an undecided start. Like Aggie says, that first 30 minutes, very challenging to get direction, but once we do, we're going to be investing into that move and trading the way that we do. Okay, as we start today, good morning to everybody here in the room, and good morning to everybody on YouTube this morning. Our community continues to grow and grow and grow. It's been a blessing to see so many people come into the room, come in to join us at the 44 Trading Room on YouTube. And if you want to do that, you can do that each and every day. You can come into this room here and take advantage of a 7-day free trial. So if you want to do that, come on in. And looking for the open today. And if you want to come and join us, you can do that by hitting the link that Clifton has. All right, welcome to everybody in the room and on YouTube this morning. Okay, let's talk about these markets. Get you prepared for the day here now. Start off with the Asian futures or the Asian markets here in the overnight session. The Nikkei lost 27 points. Hong Kong Hang Seng down 326, and the Shanghai and China the only one that was up 6.55 points. Europe still in session right now. They are red across the board. German DAX is down 129. FTSE in UK down 14. CAC 40 in Paris down 50 this morning. Combine that with Asia, you've only got one market up, 5 markets down. Putting pressure on the U.S. futures this morning. Dow futures down 34. S&P futures down 10.75. And the NASDAQ futures this morning down 67.25. Oil's up $1.21 over 70. Nice little bounce there. And if you're in the gold patch this morning, well, you're greeted with another big day up. Gold up $22, $27.52.60 per troy ounce, a big move. And also silver up a full percentage point here, up $1.16, up 5. Is that 5 or 3? 3.5%. Wow, that's crazy this morning. Copper's up, platinum's up, palladium is down this morning. Disney in the news will name Iger's successor in early 2026. And Jim Gorman will become a board chair next year as well. Kevnu shares surging this morning after activists Starboard takes strike or takes stake in it. And we've got that. Let me see Kevnu here. We had it up here earlier. We make sure that we're not missing anything on it. I must have taken it off for some reason here. Let's see. Kevnu. Let me look here. There we go. Kevnu this morning. Kenview this morning. Yeah, I don't have it up this morning for whatever reason. Okay, if you want to post that, please do. Okay, let's say good morning to everybody here this morning. We've got Chick-fil-A in the news, releasing its own entertainment app with family-friendly shows and podcasts. That's nothing there. That's about it. Here's what I want to say. Goldman Sachs forecasts just a 3% S&P 500 annual return for the next 10 years, down from 13% in the last decade, which is interesting for investors. And then last but not least, Microsoft to roll out new autonomous AI agents next month, fending off the challenge from Salesforce. Okay, let's say good morning to everybody here in the room, and then we'll pick out some stocks, and we should be good to go. Lee, good morning to you. Allie, good morning. Mark, good morning to you. And Dino, good morning. Jennifer, good morning to you. Good morning, Mark O. Thank you for posting. Tony, what do you say? Good morning to you. Lee, good morning. Tim, good morning. Jonathan, good morning to you. Seth, good morning. Jonathan, good morning. Steve, good morning. Drawer, good morning to you. And good morning, Chris. And good morning, Scott V. Great to have everybody on board here. The DVG will continue to be out today. He'll be back tomorrow. Looking forward to trading with him and getting him back. A couple of posts this morning. The HUM trade over 273. This will be HUM. Got to be careful because it's a NYSE stock, an NYSE stock. They don't always move as quick as NASDAQ stocks because they don't have a ton of people watching them. But 273 on the Humana trade. That's good for at least 5 points, I think, to the upside. Also, Netflix this morning, NFLX. In a down market, this stock has got traction and running higher. 766 this morning on the upside on Netflix. Okay. NVDA also, I'm going to post it at 138. Now, it's a small mover, but NVDA long over 138. Got to pull back to get that number. I realize that, but that's a good number in the sand. That's yesterday's or Friday's close. And then, oh, wait, I've got Netflix on here twice. Let's go to, I think it's JD. It's the other one I was looking at this morning. Yeah, JD this morning. Let's go to another one here. Don't really love the JD action here with that volume in there. But here's the opening bell, so we're going to have to roll with what we have this morning. APP, Jonathan, let me take a look at it here. APP.
Hi, Scott. Traders.
Hey,
morning.
Amir. Good morning to you. Looks great to the upside, Jonathan. Thank you for posting. Amir, how are you today?
Pretty good. Pretty good.
That's good. That's great.
New week. You're at your home or not yet?
No, not yet. Nope.
Not yet.
It's going to be another month.
Wow.
Wow, SMCI. Crazy move here, SMCI. Wow, look at it go. Look at SMCI roll here. Boeing down this morning. I'm going to take Boeing over 159 this morning. BA long 159. Watch the Boeing trade here. Target's going to be 160 on Boeing. In fact, I'm going to hold on here because if we get that 160.50, I'm going to add right there at 160.50, go full share size on the trade on Boeing, BA. SMCI, nice move up here. Love Humana. Where did I post Humana at pre-market here? 273. Yeah, I think I'm going to still take that here. Okay, watch the ad here. There it is. Full share size now on Boeing on the breakout here. 161 will be my first target here. 161 coming up on it. There we go. 161.05, 161.06. I am out of the trade here. 3/4 of the trade out Boeing. All right. All right. First trade of the day. We're out of the gate quick here this morning on Boeing. SMCI pulling back. You're into the Humana trade, HUM 273. 275 is going to be my target now on Humana, HUM. Watch it here this morning. Go, Humana, go. Don't let off the pedal here. Target's going to be 275 on Humana, 275 on Humana. We're going to get there on the ask. Watch the bid come up now. 275 target on Humana, HUM. Jared, good morning to you. I think I've got my my fix on my my headset too on the volume. I've had that was as you guys know, I had a problem on Friday, and that's because I was on using the Wi-Fi and not direct connect. Now I'm direct connect. Got the cord across the entire room. About a 20-foot cord, 25-foot cord. Wow, NVDA. $275 target Humana. Oh yeah. Okay, traders, out all shares Boeing. All shares Boeing. I am done. Done with the trade. Now I'm just focusing on Humana this morning. HUM. I want that 275. So we're a little bit spready right now, but that's okay. Let's let it tighten up, and it should go to that 277 will be my final target on Humana, HUM. Wow, NVDA, look at these stocks here. That APP, great pickup there on APP, Jonathan. Nice move out. Look at that. Just really cleaning it up. Okay, 275 target Humana. Spread is widened on Humana. That's what worries me a bit. $1 away now. You got some good buying volume in there. Look at that 274 loaded up on Humana. Dollar spread. That's what worries me on the trade. Keep an eye on it. Boeing getting even more here. Here comes Humana. 50 cents to go now on Humana. 275 target HUM. Very slow. This will be, I'm not going to play any of these NYSE stocks anymore. They're just a little bit slow and true for me.
Watching MU.
4750 SMCI. SMCI. Long 4750. Target's going to be 48. Okay. Watch it. SMCI. Long the stock. 48 target SMCI. Come on, Humana. Get out of your own way here.
Above 3060. 30 cent stop. Has to be quick scalp. So I'm watching DJT and I'm watching MU. MU is in. Above 110. I wrote you 40 cent stop. Got exactly to support from day before. And 1-to-1. Want to see another candle. DJT. Waiting above 3060.
Come on, Humana, don't let us down. Look at NVDA, Amir. Absolutely
Yeah, I'm
cracking.
watching. Believe me, I'm not saying nothing, but I'm watching. It's like I wanted to write PDD above the second candle, see what it did. Some people come with mission today, Scott, the big guys. You see those footsteps? Really, really, yeah. Don't have
Hey,
nothing to
SMCI
say.
target 48. SMCI target 48. Humana just slow right now, right out of the gate here. Just need that 275. I'm going to be patient with this trade.
DJT is close. 3060.
We're opening up red, but just 6 points on the NASDAQ, 52 on the Dow right now. So not bad. Come on, SMCI, don't do this to us.
MU above 110.50. I'm gonna add stop will be 30 cents. Only above 50. 110.50. DJT is still okay. I'm still gonna keep it like 30-40 cents, not more than that.
SMCI and Humana, that's all I have.
Where was your entry in SMCI, Scott?
My SMCI 4750.
Okay. I think about 48 I'm gonna join you.
Yeah, I think it's going to get there, really.
Yeah.
Come on. Come on.
DJT. Boom. Okay. Let's see that the boom is not in our face. High of the day, 31. Daily looks great. There's so much potential there. You have to keep your stop there because if it's going your way, it's gonna be amazing. If you don't have any stop, devastate. So that's the situation.
No kidding, right?
MU still okay?
Come on, Humana. Keep pumping now. 275 target here on HUM. We're going to get this. And we're going to get SMCI.
109.90 I'm reducing. 110.50 I'm gonna add more.
Come on, Humana. 11 cents away on SMCI. Looking good. Meta. Yep. Take a look at it, Kev. Okay, traders, just released some of my SMCI. Half of the trade out here at the break of 48. That's a nice positive trade here. Again, 2 winning trades in a row. And then we've got Humana right now. So Boeing, SMCI, and now let's go for the triple here on Humana. Yep. Meta, I mean, I think Meta, you see Meta, and then you could add under that the 572 area as well. For sure.
There is a small cap I'm watching. I don't know what's happened to me today with the small cap, but there is some small cap.
Okay, traders, I'm going to take this opportunity to come out of all trades on SMCI, all shares SMCI. So I'm completely flat with the exception of Humana right now.
Okay, guys, MU. I add more. DJT, I just reduced under entry, still stop is under 30.30.
$275 target. That's it. That's all I'm waiting on is Humana. Now you can see, just as an example, a lot of these stocks move rather quickly because we're trading mostly NASDAQ stocks. When you switch over to a NYSE stock, an NYSE stock, New York Stock Exchange, it tends to be slow because there's a lot of investors and they're not always running to the next best thing and not always just day trading or trading stocks. They're mostly investors, so you'll see them hit at certain levels to make the investment for long term, and that's why you don't see many NYSE stocks just skyrocket all the time.
Took the partial on SMCI exactly at the time, Scott. Exactly.
Yep.
Good timing. Still in DJT. And MU.
This is that morning pullback probably right now.
DJT above 84. I'm gonna add full size again. 85.
Hopefully this is not a rollover, just a pullback. Want to go 3 for 3, want to have that perfect record this morning. Any type of pullback on Boeing or NVDA could be viable now. Morning's looking good though, I will tell you. You know, we started off a little bit red and now we've bounced back very nicely.
Don't forget SYTA, the small cap. 258, 30 cent stop. Okay, DJT out. Only half position, but yeah, we're not playing with that stock. Also, SYTA broke the formation.
Okay, Humana 267 will be my stop on HUM.
Two trades, guys. Same sector coin. 1240 and Mara 1820. Both looks pretty good. MU. Look at this candle. Oh yeah. I want to see if at least 111. Give us 1 point. And even though we have 111.15 is the close of Friday, I want to see how we're going to deal with that, but that's my target there. Another small cap, a save. I was watching save. Also a scalp to 10. Small stop. You have to size it correctly.
$267 will be my stop loss here. It's too bad on Humana. Really thought we'd had this thing rolling.
Coin decide to break the zero up. Still more Mara and coin relevant.
Maybe Saved by the Bell here. 267 on Humana.
Okay guys, coin in and Mara in. So we have coin, Mara, and save. Broke like 1 cent. Okay. Coin broke the 213. Okay, we have almost $1 in coin. Still looking good. We started there. Okay, coin.
I don't know if we'll come off the bottom, but I'll tell you what, it's starting to firm up here with Humana. You could see yesterday's close on there and the dotted white line, and we just bounced off of that. And hopefully we'll come back up to that VWAP line. Again, 275 is still the target on the stock, so just be patient here.
Today patience is required, huh, Scott?
Oh, there's no doubt. Yep.
Today question, yeah, definitely. Okay, guys, coin. I want to see at least 2 points for the partial. High of the day. Wow, yeah, we have a lot of edge. We have a lot of edge. Be patient. You know, one good trade with a good, you know, risk reward. Don't forget, ATR of coin is more than 1150. Something I can't say about save. Okay, guys, 2 points in coin. The risk was like 80 cents, so it's good risk reward. You can take a partial, or you can maybe trail in like 20 cents trailing stop, you know, for the first partial, but don't sell everything. Still looking good. I see the volume coming, so be patient. Mara, 5 cents. Okay, so there is a partial in coin. I don't like the way Mara, so to like here 5 cents under, I'm reducing half position, stop, remaining for the rest. Save, guys. 10 cents, but our stop was like 15, so it's pretty good. Coin looking good. Next area I want to see 216.20, high of the day. I want to see how it's going to behave. According to that, I will see if I can take another partial or just wait. Save, we have a new high.
Wow, SMCI just off to the races now. Nice move. I like APP up here as well. Right up at the top. I'm going to take this trade.
This candle in SMCI, like, you know, the guys that Want to buy, they don't care. They just throw everything. Who cares? They're gonna see.
Yeah, close their
They're gonna
eyes.
see them or not. Really, they don't care. They just throw order. That's it. 500,000 shares here.
Okay, my favorite type of breakout trade here on APP, breakout right at the top.
Safe guys, we're getting to 1-1. Get in there. That's not my target, but get in there. If you are in this trade, it has to be a quantity. Like, you know, at least 4 digits. Watching PDD.
Yeah, I think I'm going to be stuck in this Humana trade, unfortunately. Waiting for APP to come.
Okay, Mara. Maybe I was not enough patient with Mara, but still, it's looking good. 20 cents. Again, 1-to-1. It's not like coin, but still, money is money. Also still in MU. I didn't take a partial, which I don't know.
Yeah, I don't know what to say about Humana. All that I can say is under 267, I'll be out of the trade here and still waiting for APP.
Coin, guys, we have 3 points. Again, 216 area. I want to see how we're going to deal with the high of the day. That's my area for a partial.
Traders, I'll be right back.
say if we have a retest. So now if it's going to drop to 207, I'm going to reduce half position. High of the day 221. Still in coin half position. Still in Mara. Stop in Mara under the entry. Same in coin. I'm giving it space. 2 cents under.
Good job, Seth. Well, decent move now on Humanity. Let's just see if it goes. SMCI, that's the promised land right there now. Crazy. Yeah, and SMCI is tracking towards that. Let's see if we can get a better glimpse here. Towards that 50 area up here. That's really where you want to see it. And plus you could see the breakout here. 48. Yeah, the break of 49 is meaningful on this stock here, so let's watch this SMCI today too. On its way to 50. That could be a nice breakout, could be a nice trade to hold. Yeah, well, I'll tell you what, just very disappointed in Humana following through right now. SMCI straight up, straight down.
Yeah, if you have the view up there, so it can be a support. Guys, relax with the coin. We have to see. Still in Mara, still in coin. Half position both.
Yeah, Humana just needs to get over that VWAP. This is the type of stock that if you don't take the partials early, you could be stuck on it, and that's how I feel right now with it.
Still watching PDD. I'm adjusting my entry 2580. Save, I'm raising my stop like 3 cents under the entry. 206, 7.
It could add to the, since it is up for the day, the Humana trade over the VWAP line. I'm going to post this BA trade over 162 BA. Boeing, long 162. Keep an eye on this.
Another retest in save.
SMCI right back up. Those of you that are trying to get into this Boeing trade with me, no dice, just wait on it.
PDD is close.
Yeah, very disappointed in HUM. In fact, I talked about it in the pre-market today about how NYSE stocks are just kind of, you know, they have the spark and then they just kind of fizzle, and that's where we're at with it. I am watching Boeing. Boeing will be my next trade most certainly. Watch Boeing here on the breakout. Okay, Boeing, if you're into the Boeing trade, just be patient now. Boeing 162 now, coming up on it, and we're going to be looking for 1 point to the upside.
definitely something that pops to me today. There's a huge gap between amount of green in a trade and how much I succeed to grab. And something like this, you can, if you do your report card, let's say trade view, when you load there, for example, you could see in a trade after you load it how much was the amount profit that you could get there. And usually you want to get at least, 60 and more percent. Definitely today I saw a lot of money. I took some partials, but I let some of it just fade. I want to see if Nvidia holds the 140 here. My game plan, what I'm trying to see is scalp trade above 140.20. I want to see if it's on, yeah, 25 cents Nvidia. As long as it's holding the 95 here. Only if it's holding the 95 here.
Yeah, I'm in BA too. 160.50 will be my stop loss. 160.50. 160.50. So we'll keep an eye on it here. Need it to stop right about here.
Okay, Nvidia. I want to see the next candle. I'm zooming it even on 2 minutes on Nvidia, which usually I don't, but I want to zoom in with some scalping it. High of the candle is around 140.39. Look at the candle in the market, guys.
Crazy, right? Right down now, SMCI at the low of the day.
All day is crazy, Scott. All day
Yeah.
is crazy, yeah. You know.
I mentioned before, we've been having some trouble, some tougher days of trading because of the fact that we're not seeing that follow through, that market that's either going to go up or follow through. We get that chop and then very limited direction.
It's more like scalping, Scott. Bounce
Yeah.
is supposed to be like 3/4, raise the stop and be very aggressive. That's the only thing, you know, because you're not going to change your methods, you know. The thing's going okay. You just need to adjust your profit taking. Definitely. Definitely today, if I would done that, much better. Even Tesla looks interested, guy. If the market will go like this, let's see Tesla. Okay, Nvidia. Wanna do Tesla also, 219, 60 cents.
Just have your stop loss in place with Boeing in case we don't get the follow through.
$140.60 was the previous high in Tesla. Sorry, in Nvidia.
We can do this. Come on.
Okay, 40 cents in Nvidia.
Yep, Nvidia looking good.
We're now hitting like intersection of the 9 and the view up. Okay, we have 50 cents in Nvidia. Okay, the partial will be 3/4. If you heard what I said to myself, yeah. I want to see if we can get to the 141, but definitely entry was 20. We are now 60 cents in the money. Candle looks still good. Spread right now is like 2-3 cents, not more than that. Very nice candle. 5 minutes will finish in 1 minute and a half. 2 minutes in like 30 seconds. 87 is the high. spread still 2 cents. Unbelievable. 140 stock, 2 cents spread. Unbelievable.
Do you dare take SMCI down here? I don't know. I mean, quite a risk, but that 47.26 from Friday's close looks good.
I'm not gonna let it go under 80. Not gonna let it go under. Took a partial in Nvidia. I'm raising my stop to the entry. It's all about, you know, the size. 25 cents. You can take a nice size and trade Nvidia with 25 cents. It's like almost free. So we are in a oh, my microphone was closed, sorry. So Nvidia, and if it's not going to break the 80, I'm going to take the partial. Again, 25 cents stop on $140 stock. It's pretty okay. We're now toward the 60 cents, but if I see some problem here, it's going to break the 80 on the ask. I'm going to take the first partial. It will be 3/4. And I'm still in safe. Again, $140 stock and $2 stock. My stop is like 2 cents in the system, 208. And again, we're getting to the high. Took a 3/4 partial in Nvidia. Tesla also is in from 219. Okay guys, new high in save. Who was patient to wait with save, guys? Curious. Didn't jeopardize us, but who was patient still in save? Wow, look at the bars right now in save. I'll get into all the 20 cents.
Spirit Airlines, right? Yeah.
Yeah, we took it 210.
Well,
Stop.
Yeah.
Stop under 2. You know, there's the risk-free almost, you know. And if you
Looks
size
good,
it correctly, you know how many stocks you would take with 10 cent stop, correct, Scott? Yeah.
Yep.
So
Yep.
right now my stop is 208. You know, 2 cents under. Nvidia looks good here.
Out here, let's see.
Basing on the view up. And breaking 141. can get to the high. Definitely, if I see some move in the market, I would add above 141 in Nvidia. I don't see any point right now when I see the market like this.
Still hanging on to the Humana trade. Boeing trade just right at the bottom right now. Man, killing me. Okay, about 29 cents to go before I get kicked out of the Humana trade. Yeah, I'm going to be out of the Boeing trade right here at the break of 160, and I'm out of the trade. Losing trade for me on BA, on Boeing. So the only thing I have left right now is Humana. I am still green for the day, which is fine. 2 winners, 1 loser, and then Humana. Yeah, Boeing just took me out just a few moments ago.
Guys, I'm curious. Are you reducing in a certain point in a stock? Like you have any system? There is a reason why I'm asking, but I want to see some reaction. Wake up. In the trade, when you're getting in. It has to be a system. I'm gonna give you an example. Scott, I'm taking for a second the whiteboard, okay? Okay? So, give you an example. I took 2 trades right now. Tesla, okay? And I took Nvidia. Okay? Now, in Tesla, I had like a 60-cent stop. It did like towards the 1-1, something like this, came back, you know. I reduce, usually under the entry, in certain, I'm reducing, and then I got out. So I had, now let's remember, in these 2 trades, I had 50% success, okay? So I got half lost, half risk unit. Nvidia, we had 25 cents, around 60 something, so let's say it's like 2 and something risk. I took a partial 3/4 I told you, so it's around 1.7 risk and profit. So you have we have 50% success, okay? But the key is how you manage it. So you got, I don't know, I can be profit even in 30%. If you're, again, you need a system when, how far it goes, sometimes how long it takes. For example, if I'm in a certain trade opening, it can be a minute or two. If I'm after 10 o'clock or something, sometimes it can be even 20 minutes. It depends how much the trade is doing. But you have two trades. You see, here it's half loss. Here, I think 1.7 risk profit. And I can go over and over on this. Just a second, yeah. Here's the slide. And this is basically how you manage a trade. You know, you can have, you know, losses, you can have gains. Depend what you do with them. Depend how you. And I have to tell you, there was a lot of free money that I left today, a lot. Just, you know, I had to change a little bit the partial option, and then it will be perfect, not the system. So every day you need to learn something. So this is my learn from today. Like NVIDIA, for example, we could do the same trade again. The only reason I didn't took it just because I didn't see the market support it. But again, NVIDIA got to 140, if you can see, boom, you could buy it like 140.10 even. Stop hard under 140, which actually shows the support, and boom, you could do 124. Think about it. You're risking $100, let's say. You had like 400, takes $3/4, $300 in a blink of a second. And so, but this is supposed to be your system, you know, your system for scalp, your system for managing the trade. You just can't invent it. In a day like this, if you're going to invent, it's going to be how to lose your buying power, how to lose your P&L. That's the only thing you can do today. Hope it helps.
Yeah, what I'll probably do is I'll probably just keep Humana here till the end of the day and just check it out then. Yep.
BDD got exactly to the close of Friday. I have numbers. I just want to see the price action. Like if it's gonna give another bar like this to the side, 127.70, 124.70, sorry, 65 even. And the low of the previous candle is the low, like 50 cents. This is kind of the idea. I want to see the next candles. Oh, you can definitely have a so it go like this. The reducing is just because I don't see a follow-up, but this is why I'm not getting out of the trade. We have the case of Mara. I reduced, didn't do nothing, then it did stuck around 60. I think I took like 30-cent stop, partial, and then in what I call scenario 1, you know, if it's start to move, and I see at least, you know, more than 1 to 2, 1 to something, I can take a partial, and then I can manage it like it's a full amount. And if I see some reversal that pretty far from the entry in a good key support, I will add, definitely. Just because I have half, nobody care in the market. I only the one that know that. But in some scenario that I'm working, you know, with the thinking behind is, you know, I had a vision before, it started to do something, then it's a little bit fade or something. By reducing, I keep my option, you know, if I'm gonna lose, like you saw in Tesla, I can lose half position, I can lose less. If it's going, I will still earn a little bit less, but still. So everything is, I think the decision that we are making before need to change after you in a trade, and definitely if you're in a trade for a while, you know. I can, it depends on what the market is doing, it depends what the stock is doing, it depends if there is, you know, volume, if you see some R-vol, a lot of things, you know. Before, it's like a clean page. After, you start, you know, writing what the stock is doing, what everything surrounded is doing, and you have to adjust according to that, definitely.
Yeah. Okay, traders, I'm going to call it a morning right now. I'll try to come back this afternoon. The only trade that I'm going to hold on to is Humana, HUM. And as I leave today, one of the things that goes through my mind is we're looking at the overall market right now, is that, you know, we started off the day in a small downward move. We've picked up steam. We're down about 90 points on the NASDAQ, but 330 points to the downside on the Dow to start the week off. So we'll see if there's any type of response or any type of movement higher. So I'll probably come back around 3:30 today. We'll check in. Amir will be here for a little bit, and then we'll be gone. Nice trade on Save, Amir. Really super nice. Heading up to that 240.
I didn't take nothing, Scott. I didn't take nothing, you know. Towards
Why would
250.
You, right?
Yeah,
right?
Yeah, 250. It's going to be 1 to 3. Again, guys, 1 to 3. We had 15-cent stock. So, yeah.
All right, Amir, I'll talk to you tomorrow. Traders, thank you so much.
No problem.
I appreciate
will be tomorrow. Thank you. Bye, Scott. I'm going to be here another like 10 minutes. If you have any questions, guys, feel free. This is most important, you know. Get opinion, not just from me, from you. The only trade that was really very straight, one direction, didn't jeopardize, and you just can follow, maybe raise your stop, is the save, guys, you know. Save. Small stop, huge amount of shares. Right now, you double the risk. Key level towards, you know, 250. And you don't know what's gonna happen there, really. You don't know. We have huge engulfing. On the daily, we have some resistance around 252, 270, but this is really ridiculous because around 250 or something, you're, you know, 3 risking the money, and definitely you take a partial and let the rest, you know, move, raise your stop, and hopefully let it go. little bit danger one. Again, if you want to, I'm not gonna take it with a full share size. We can go back to DJT 3050. Stop under the 30, not more than that. Wow, look at there was a kind of a bar that throw all the stops in the system under 30. Immediately came back. I think about 3050 we have some resistance around 3080 or something, but you know, I see correlation between the volume of the red and the green. Still there was much buyers on the up move. Didn't follow through, guys. Your last trade in BA, where did you take it? The BA. PDD is not relevant. Just broke the low. Where was I didn't watch BA today, so what was your trigger in BA? I have an order waiting for a partial and say, you know, a few cents before the 50. BA above 161. 50, let me see. BA. You know, when I see now everything is bad, it's smart, but if I see I'll see the pre and everything under VWAP. Only thing we had to do in BA is just short it. Yeah, you could see lower high, maybe 161, yeah, 50, but then, you know, it did 60 and then didn't succeed to go up. Definitely, I would reduce and maybe a few cents under, but yeah, definitely 162 under. Amazing shorts. I see it's under the 9 EMA. Sometimes, you know, there is a news, you know, sell the news. So people see it and wants to go, and sometimes it's difficult when you see this, you know what, I'm going to short it, I'm going to do a mean reversion, but sometimes that's what people do, you know, at least the professional. DJT, it's pretty close to the level that I wanted. And also save. And guys, I'm done for today. What price you had reduced on B? No, I didn't. I was not. I was asking. I would. It depends. How much was your stop, Tim? I can give you exactly the idea. 160, 150. How much stop you had? Like a 30-cent stop? Okay, so we need to know what was... Mark, what was your trade? What was your stop? Like a 30 cents? Let's assume that I'm seeing the consolidation and it was the low of that candle, around 30 cents, okay? Definitely you can watch. We have the chart of BA. Let's see in the room. Yeah. But we have it on 5. You could actually see it. Sometimes when the trade, I can watch it in different time frame, you know, 15, 5, and sometimes even zoom in around the VWAP, the 2. Each one, just put the BA 2 minutes. So you can see that there was a good bar, like almost 40 cent green full bar, like show buyers coming, and then you can see in 2 minutes the next 2 ones pretty reddish towards the dodgy one, like non-continuous, and then you had the 162.09. A lot of times when do you see the power, if you break the round numbers and then you pass like a butter, the 0.10, which you didn't see it. So after you see one candle like this, 2 like those, definitely if I would there under 162, I would actually reduce. Not reduce, taking the partial, which was not so bad, like a 50 cent when I jeopardized like 30, less than 1 to 2, but again, this is what you see, you know, the chart is telling me that. And definitely when it broke the, what was the number here, when it broke the, and probably another quarter under around 161, you know, 45, and then a quarter in the stop. That's the way I would manage that trade. Yeah, I have one place that I can show, and then you can see in BA, you know, like we broke, and then the next high, exactly. Look, see how beautiful it is. If you have the pre-market, you could see that the high of that trade, you know, 162.10, exactly line up with the high of the pre-market, which was a big resistance, and yeah, you know, sometimes, you know, that nobody is in safe, huh, guys? Well, toward 30 something cents. DJT is in, guys. Let's see if we are happy that we are in or not. We have some resistance. We have to break 31. That's the key. 31 and then go to the high. Except that, it's gonna be a bullshit. Guys, I'm done. Again, you see, when you want, you can ask questions and we can have a good dialogue, which is for me the best, you know. If you have any question, and this is my mail. Also, if you want to participate, I'm doing mentoring, only one-on-one. Definitely give me an email. And I'm gonna be tomorrow. I think this week I have just one mentoring. I think on Thursday. So thank you, guys. Not an easy day, but again, if you manage it, and it's a challenge, but sometimes it's good to have challenge, you know. Not that I have problem, you know, and everything is one direction and just grab the money, but definitely it was a challenge day. So thank you, guys.